So today is December 12th. This is our holiday special session on how to select and trade winning stock using the Wyckoff method. During this session, we will talk about a stock campaign. And we kind of going to start with the intentions for the stock campaign, what it is, why would we be interested in the stock campaign, how can we conduct it, how would we look at different stocks, and how would we look at the selection for your stock campaigns, and how would we trade it. There are so many elements and layers to this material that even today's 3 hours is not going to be enough. This is just, a peek into how using the Wyckoff method you can, start campaigning. And also, right away, right off the gate, I want to warn that it might seem by the material that the campaigns that I'm talking about are going to be, multi-year campaigns, and that's the fact, with the majority of the campaigns that we're going to look at. But if you're a swing trader, or even if you're an intraday trader, you still have to understand what is the current condition, not only of let's say, a popular momentum stock, but also of the industry group that the stock belongs to. Where is the stock in the relationship to the market structure? Is it in the uptrend? Is it in the downtrend? Or is it in the consolidation? If this is a consolidation, where does it happen relative to the trend? And then if you're a swing trader, you need to understand the long-term structure to pick your high probability spots to open the position. So this material might seem more valuable to the investors, but actually for swing traders, this is almost like a must. So for those of you who swing trade, I really would like you to be open-minded and to look at this and always ask yourself a question: how can I utilize this material, and how can I improve my swing trading just based on those ideas? So we'll look into the selection tools for the industry groups and stocks. Then once we do that selection, we're going to look into the structure analysis, and those are going to be our Wyckoffian ideas. We're going to quickly talk about the phase analysis and the events that should happen in the consolidation, and more on that later on. We'll look into all of the types of analysis. We're going to look at the structural analysis. We're going to look at the confirmation of the supply and demand in the consolidation. We're going to look at the exhibition of leadership, either in the trading range or slightly out of the trading range. We're going to touch on the change of character concept as to how the environment changes from trending to non-trending, and how would we recognize that. Then we're going to talk about adding to the position more and creating a meaningful size when you are right. I have some thoughts about that. And then lastly, we'll talk about how would we follow the trend and what would be the exit criteria. And again, even 3 hours, and I deliberately put 3 hours, and I thought that, let's just have a class. So in a lot of ways, the way how we're going to conduct this session with my students is going to be exactly how we conduct the class. And we usually go for about 2.5 hours. And our classes are always interactive classes. So I always talk to students, because it's through the conversation that we learn much better. We have a lot of ideas that are popping up in our heads. So you're gonna look at this through the prism of, how our students are, absorbing and learning this material. This is a case study. So we are going to look at the specific stock and specific industry group and specific stocks in that industry group. So there will be just a little bit of lecturing, but it's kind of going to be on the way as we go from one idea to another. I have populated some slides with some, more theoretical ideas. Quick announcements. So the next event that we're going to have is going to be on December 19th. That's going to be online workshop on swing trading. So for those of you who are swing traders, highly recommend that. We conducted this workshop first time in August in San Francisco. This workshop is going to be online and was a very, very popular product. We are not only talking about how to select your swing trades, how to find the points of entry, how to follow your swing trades, but also we are talking about optimization of your swing trading. And what that means is how do you select the leadership among the leading stocks, and how do you select that optimal point of entry so that as you enter, the stock starts moving almost instantly in the direction of your directional bias. And then we'll talk about in the larger, let's say, uptrend, downtrend, what are the places and spots where you can open the position and where the velocity with which the stock travels, the momentum, is going to be the highest relative to other peers in the same, let's say, industry group. So those ideas about optimization and the effective use of your capital in swing trading should be really, really interesting ideas for intermediate and advanced traders. So for those of you who are interested, I would highly recommend to sign up. And then the next event after that is going to be our first session of the Advanced Wyckoff Trading course. This is the core course that we teach. It's going to start in January. The first session is always free. For both of those events, we have a promotion today. So if by the end of this session you're saying to yourself, this is a great material, I want to know this, I want to know more about Wyckoff Method, or maybe you already know something about Wyckoff Method and you want to improve your skill levels of recognition, or you want to get more knowledge, then definitely Advanced Wyckoff Trading course is the way to go. And just use this opportunity today and sign up on our website, wyckoffanalytics.com. We are planning on another free event together with Ron Brown from HDSI, and Ron is here in the audience. Tentatively, we are putting this on the Monday of the 28th of December, or maybe 29th. And I'm really thrilled, to have that session. We are planning out yet, but still, I'm thrilled because there is the new feature that is so Wyckoff related with HDSI, and that is volume price analysis. And Ron has been commenting on that and showing some charts and giving us some videos on that. So Ron is going to talk about this, and I will pick it up from him and talk about those VP analysis in the context of the Wyckoffian structural analysis. So we'll talk about the signals, VPA signals, and where they occur, and whether, considering where the signal occurs, we are going to take, specific, we're going to make specific decision there. So very interesting stuff. I'm personally very, thrilled again, to do that session with Ron. So we'll forward more details a little bit later on. Now, the question on the recordings and on the slides. So the slides are going to be available to all of the students, and that's kind of like the priority for us with all of these free sessions. But the recording is going to be available to everyone. I'm going to post this recording on our channel, Wyckoff Method YouTube channel, And for those of you who will not see it, just email me and I'll definitely forward you the link. I'll also post it on our website, wyckoffanalytics.com. All right, guys, I think that's it for the initial remarks. Unless you have any questions, let's just proceed. We have a lot of material today. This is the disclaimer. You can read this then on the video later on. Okay. So, a Wyckoff campaign, what is it? Usually when we talk about campaigns, we are probably more referring to institutional trading. And institutions are very, and by institutions I mean big institutions. I don't necessarily mean, a small boutique hedge funds that have, like, let's say between $5 to $50 million. I'm talking about huge institutions that have, a huge financial resource. Something like insurance company, pension funds, huge mutual funds, huge hedge funds. Those are the institutions that are going to have, billions of dollars, and when they create their positions, they don't necessarily come into the positions just for, let's say, a couple of days or a couple of weeks or a couple of months. When they establish a core position in a stock, they prefer to stay in this stock or the industry group for the duration of a business cycle. There are a lot of reasons why they would select a specific stock, and we will not go into this during this session. But the time duration of their positions, in a lot of cases, dictated by their outlook on the economy overall, their outlook on a specific industry or specific industry group, or on a specific stock or stocks. And also there are quite a lot of advantages for them to have a long-term campaign, and that is all related to the long-term tax benefits and low inventory turnover. Now, as they conduct this campaign, they're going to start accumulating during an area of accumulation. And here on this chart, you see Alaska Air Group, and let me just grab the pen. And we see that there is a very prolonged accumulation. There is an original accumulation range right here. You can also include this area right here. This is the first time when there was some kind of stop in action and attempt to move the price up. So during all of this time, big institutions are going to accumulate a position, a sizable position in the stock, because their perception and valuation of the stock in the future is somewhere here already. They're thinking that the industry as a whole is going to improve, the economy as a whole is going to improve, or certain conditions like with airline stocks. We are seeing that the drop in the oil is helping the airline stocks to remain the leaders, is going to be in effect. And as I mentioned, long-term tax benefits and low inventory turnover is extremely important to those institutions. And they are the ones who are going to produce this type of big moves, buying waves. And we want to recognize first the leadership of the industry group, the leadership of the specific stock. And then we want to participate and recognize, the trading ranges out of which we're going to have some kind of swing moves to the upside. So this is where the idea that this material is actually a necessity for swing traders come from, because as long as you recognize the leadership, and as long as you recognize where this leadership is in the relationship to the trend, then you can take advantages of those big momentum swing moves on the way up or on the way down. Now let's talk really quickly about our goals for conducting the campaign. From different time frames, whether you're a swing trader or you are an investor, you still want to trade in the direction of the secular or cyclical bull market. You want to pick an industry that would have a thematical buy program by institutions. And I'll talk a little bit more about this, and I'll show you on the heat map an example of a thematical buy program by institutions. Then we want to select a specific leading stock or leading stocks within that group that is starting to outperform, or that is a leadership group. We want to time our entries in those stocks, and we want to have a meaningful position size in that campaign. In a lot of cases, when I see my students improve in their selection process, and then their visual recognition skills have improved, or their execution skills have improved as well, and everything seems to be okay. In a lot of cases, what I see is there is a lack of aggressiveness in the positions when they are correct. And I like this expression by George Soros: when you're right, you have to be a pig. So when you recognize that your analysis is correct, and you entered the position, and the position is going in your direction, and it seems that everything is working your way, it's a high probability trade. You gotta be a pig and create a meaningful position, because those trades are gonna be very few. And when you are in the one, and you have the awareness that you are in that type of trade, you want to take a full advantage of it, and you want to deliberately increase your size and deliberately increase your risk, as the probabilities are going to be on your side. And also, as I mentioned, to those of you who are swing traders, as you're campaigning a stock like this, or the industry group like this, you want also to have an opportunity to swing trade this stock or stocks in the industry group. I have not mentioned here in our goals, but this also could be a more sophisticated approach for those of you who are more advanced in your trading. And that is, as you're campaigning, you can create at certain spots, a neutrality for your position using, let's say, options trading, or you can use pair trading. And you can play around with those ideas during the consolidations, and as the price goes into the consolidation or gets out of the consolidation. So, and that is primarily being done not necessarily for, increase of your alpha, but it's more done for a more stabilization of your equity curve. Because when you create some kind of positions that are going to be in neutral position, as to the directional bias, and basically even during the consolidation, your equity curve is much more stable. This idea is not going to be discussed today, but we definitely discussed that during our classes. Okay, and here again on this example, this is the stock, and this is the leadership, the type of leadership that we're looking for. Look at this whole move that Alaska had since 2009, from this area right here and from this original trading range. And we're already here at this astronomical return. Now, you might say, well, what about this number here? 6 years, more than 6 years, we would be in this position if we would take this approach, this campaign approach. But I always stress out a different number, which is extremely important, and that is your annualized return on this position. So if you think about this in terms of the long-term investments, where else can you get, let's say, more than 50% annualized return on your investments? Can you go to real estate and create that type of number? Well, probably here in San Francisco, where I live, we can kind of like be somewhat close. I mean, last year we had, I think, 20-25% up, in real estate. prices. And of course, if you own, you're probably, leveraged, so you're going to have a meaningful return there. But yet, in the stock market, to find that type of the return, you always have to be in the leadership stocks. Think about this number also from a different perspective. Think in terms of the usage of your capital. If you are, let's say, swing trading the same stock, how many mistakes do you think you're going to make if you're going to try to get in, get out? You're probably going to, make some mistakes here and there. You're probably going to miss some of the swings because you're not going to recognize, the short-term leadership in specific spots. And leaders are like that. They're leading during one swing and then they rest. There is no interest by big institutions for some time in those stocks. So some of the meaningful moves are going to be missed, and therefore your annualized return might be much smaller. So just something to think about if you're a swing trader or if you're an intraday trader. Okay, so the first thing that we're going to do is we're going to talk about how do we actually find those industry groups that are of interest to us, for our campaigns. And the first step for any Wyckoff, and this is probably going to be a shortcut. We don't want to necessarily go right away into the structural analysis where we're looking at all of the stocks from the perspective of what is the trend there, if it's a consolidation, what is the phase there, what is the Wyckoff event, where we are in the structure, and so on and so forth. If we do that, that would take a lot of time. So you want to have a shortcut to the maybe top 100, 200 stocks if you're doing your analysis on a weekly basis. And then out of those 200 stocks, you want then look into the structural analysis and define the ones that are in the correct position for us. So we definitely would like to use some kind of relative strength ranking or rotation tools. And I'm giving you some examples here. The main picture is from our website, Wyckoff Analytics, and this shows you a whole heat map with the primary sectors and with the industry groups. Let me just point this out here. So the sectors, then the industry groups, and then the stocks in those industry groups. And by the way, this heat map was created by Howard, one of our alumni. And right away, I'm going to say that the access to this particular heat map is only for our students. It's a very educational product. It doesn't contain a big universe of stocks. So like with other softwares, you will have 8,000 stocks. I think that, and Howard, correct me if I'm wrong, I think that we have about 28 plus 100 stocks in this universe. And the main purpose was just, for our students to use this product to practice their selection. And, with our website, they can do this on the historic examples, and because there is a date range right here that you can specify, and also on the current market. But there are quite a few softwares where you can find those type of selection tools. One of them is going to be HDSI, and we'll talk about this probably slightly, during our, December 28th session. Stock Charts has the relative rotation graphs by Julius de Campanier, and I think from the perspective of the rotation, that's a very nice visual tool. You just have to understand that it's not a systematic tool. You have to create the rules as to, how would you choose your stocks there. So, just a little remark there. FinViz, a free heat map that you can use as well. MarketSmith has its own group classification that I really like as well. Sometimes I'll look at that. two main ideas behind any relative strength ranking rotation tools, and that is current leadership, whether it's on the upside or on the downside, and then rotation. And I think that people actually overestimate the current leadership ranking, and they underestimate the rotational aspect of the relative strength tools. So during our classes on the relative and comparative strength analysis, we basically concentrate only on the rotation. And if you think about it, what would the top 10 stocks or the top, let's say, 10 industry groups would tell you about where they are structurally relative to, let's say, the market trend? Most likely your top 10 are going to be already in the uptrend, and they are most likely are going to be extended. So from the perspective of your trading, you will be thinking, what can I do there? I can't really establish a position early on in the trading range because the price is already overextended in that upswing. So my only option there are going to be either swing trade, and for the swing trade, I still need to wait for some kind of short-term reaction or short-term consolidation, or I'm going to be extremely small in my time frame, and I'm just going to, either short-term swing trade, from 1 day to maybe like 5 days in the swing, or I'm going to intraday trade. So your options are somewhat limited. You're picking the correct stuff, but it's already overextended. And that works both actually on the upside and on the downside. So our interest is more about where the money is going, because we want to track big institutions. Where are they moving their financial resources? What do they see in the market in terms of the potential future leadership? And we're assuming that they have more information. They are much better in their, investment trading decision making, and we want to decipher their steps and we want to follow them. So rotational model works much, much better for us in terms of identifying, let's say, a new developing rally in the consolidation that could be the beginning of the new uptrend. So we want to jump on that and to see where this sign of leadership starts to develop in the structure. All right. Okay, so here is the time where I'm going to invite one of our current students, Brian, to interact with me, and this is exactly what we do in our classes. So Brian, welcome.
Hi, Roman.
Okay, great to hear from you. So we are looking here at the stock Alaska Airlines, and this is the primary stock that we're going to be talking about, during this session. And you might recognize this stock, by the way. Do you feel like you've...
Yeah, I think we covered it. I'm trying to remember which class, whether it was in AWC or in the analytics.
Yeah, in the Wyckoff Practicum. This is one of the 4 stocks. So what we do in the Wyckoff Practicum, Wyckoff Practicum is the course after the Advanced Wyckoff course. So during the Wyckoff Advanced course, we just, going through all of the material. We talk about the market structure, we talk about supply and demand, we talk about relative and comparative strength, we talk about trading tactics. It takes us 4 months and 14 sessions to go through that material. Then after that, I'd like our students to go into Wyckoff Practicum. So Wyckoff Practicum is all about putting on the chart and opening the chart bar by bar or swing by swing, and basically going into the action sequence where in real time students have almost instant feedback as to their analysis. So in this, Brian is part of the Wyckoff Practicum class right now, and Alaska is one of those stocks, Brian, that were hidden. Um, I believe it's stock number 1. And we're almost done. We're only going to have one session, and we've covered this stock, so I don't really care, that I'm uncovering it right now, but, Brian, you should be familiar with this stock. So
Yes.
we have the stock, and then we also have, and I took this from our heat map, a ranking for the industry group, airlines, and then I put here big and medium cap stocks for this industry group. Also, please note that there is a date range, and I went into the history and I put the date range for 2008, 2009, and you could see the dates here at the top for both the industry group and the stocks. And the biggest question, Brian, here is, as we look at the ranking, let's start with the industry group. What do we see here for the ranking of the industry group?
We see that it is improving.
Well, there was first some kind of deterioration, right? So we are going, and I believe we have 156 or 58 groups. So we're deteriorating here to almost the bottom, and then there is a big jump, right here, from 142 to 87, and this is the rotation that we're looking for. We're not necessarily looking for the stocks that are going to be like in the top 10, or the industry groups that are going to be in the top 10, unless they got there from, let's say, a position from the 80s, 50s, 60s, and we saw that rotation. But even for the laggards, the ones that were not necessarily very attractive industry groups, whenever we see such improvement, a rotation, we want to have a look inside as to what is happening there. Why is this group improving? Are there any leadership leading stocks that we can look at from the structural point of view? So as we look at the stocks, Brian, what catches your eye?
Well, definitely that Alaska Air is among the leaders in this group. It's number 2.
Okay, yeah, so Alaska, and we would probably not even look at the chart right away for the Alaska. As we look through the stocks, we're definitely going to notice that Hawaiian Airlines is a leading airlines, and we see a lot of green here, so which is great for the leadership material. So we definitely want to look at this stock. We see that Alaska also had some kind of improvement. Again, we're looking at the period where the stock has been uninteresting to us, and then suddenly we have this big jump. Look at this, from 98, and for the stocks, the ranking goes from 1 to 100. So from 89, almost the last in the ranking, to 22. So what is it? What is happening here that there is such a big rotation into the stock? So we definitely want to have a look into that. Okay, Brian, anything else? Maybe in other stocks that you would look at? Well, if we look at, let's say, all of these stocks, is there, yeah, go ahead.
There hasn't been nearly as much improvement in the lower half of the list as there has in the top.
Yeah, so if we look at the same area, and we would want to see, as the industry group improves, we want to see what kind of stocks improve in that industry group. So as we look, let's say, through the Southwest, from 97 goes to 86. Yeah, there is some improvement, but it's not as much. American from 56 actually deteriorates to 61. 68 for Delta to 59, so also deterioration. And I don't want to look at this stock. necessarily, so we're just going to concentrate on this. So there is definitely a leadership, a current leadership. There is a leadership that is seeing some kind of money flow into the stock. So we want to look at that. And then there is one more stock that I identified here, and the jump here is not that much, but we want to look at that stock just in case to see what kind of structure is this stock has. Also, I thought that, for us looking at all of these stocks from the perspective of the structure, because there are not that many stocks that in this industry group. So you can look through all of them and just to see where we are in terms of the trend position or a position in the consolidation. So we'll do just that. But the main idea here for this slide is that you want to find the industry groups and then look at the stocks within this industry groups, the ones that are going to have this type of rotational pattern, where there is some kind of improvement or deterioration depending on which direction you want to trade. Frank is asking, what period do you use for relative strength, say 6 months? It's actually, let's answer this question later on when Howard's going to be on, because he is the one who actually created this heat map. So let's actually ask this question when he's going to be on. So Frank, just remind me. Okay, so let's look at the majority of the stocks from the structural perspective, in this group, and we're going to start with Southwest. So Southwest was not the one actually that we were so excited about. So we see that there is some improvement from 96 to 86, but we want to look at the structure and we want to understand where the stock is in terms of the structure, what is supply and demand doing, is there any leadership in that stock. And we're going to start, Brian, with the current trend. What is the current trend? And you can give me different time frames here.
So the short time frame on the far right of the chart is a downtrend that maybe has ended and maybe is starting into a new consolidation.
Okay, possibly a new consolidation here. Possibly also, some move to the upside as we had the move to the downside. Okay, but yes, more of the intermediate term trend is down, and we're probably done with this trend because there is some kind of break of a trend right here. Okay, what is the long-term trend?
The long-term trend is a consolidation, a trading range.
Yes, we are mostly consolidating here. You might be thinking also that, well, maybe by the definition of the downtrend, we are in the downtrend. So lower highs and lower lows. And in a way, you would be correct. You can do this and you can say that, we are sloping down, we have some kind of downtrend movement, but the majority of the price action has happened in this area, and it's just, very much horizontal deviation around the specific horizontal mean that we see, and therefore we can put the boundaries for this range, our resistance and our support boundaries. Okay, and relative to these boundaries, if this is a consolidation, then we can use our Wyckoff analysis, for understanding where we are in terms of the phases and in terms of the Wyckoff events. And Brian, before I ask you to label this chart, let me just quickly go through this, schematic for those of you here who are not that familiar with Wyckoff methodology. So one of the things that Wyckoff method is very diligent about is looking into the areas of consolidation. And the idea there is that it's out of the consolidation that we're going to have some kind of directional move, whether it's going to be up or down. During the consolidation, this is where big institutions are operating, creating their positions. And we want to look into their footsteps during the consolidation and decipher what is the next directional bias going to be. And directional bias is very important, out of the consolidation, because if you establish a position during the consolidation or slightly out of the consolidation, you are opening a position at the beginning of a new trend. And therefore, your risk is going to be lower, your profits are going to be higher, and so on and so forth. So how did Wyckoff look at the consolidation? He has recognized that consolidation starts and goes through specific phases that are somewhat generic for all of the consolidations. The first phase, which he called phase A, the intention of that phase is to stop the previous trend. So in this example, if we are having a downswing here, the first action that we're going to see going into the consolidation is some kind of climactic action. Climactic action is a point of fear where weak public hands are getting rid of the stock, and where weak professional hands are also being caught on the wrong side, and where smart money are starting to accumulate a big, meaningful position as they see that, let's say, valuation at this point may be in their favor, or they see that on the horizon some kind of changes in the economy, in the industry, or for a specific stock. And the stopping action is going to have three elements to it. Climactic action, which is going to be associated with a lot of big spread, high velocity, high volume. And then the next thing that's going to happen is the automatic rally. Automatic rally is going to happen as a change of character. This is going to be the largest rally on the last swing to the downside. It's going to indicate to us that from a trending environment, a downtrend, we are going to most likely shift to a non-trending environment. And at the minimum, we're just going to consolidate. And we'll look into this concept a little bit today. Then after the change of character, automatic rally, we're going to retest locally the climactic action that has happened prior to that. And that's just going to indicate to us what kind of supply we still have. If the secondary test undercuts the support, has still quite a lot of supply signature to it, or maybe it even exceeds the supply signature that we experienced on the climactic action, that would mean that the testing of the lows are still going to happen further down the trading range, and we still need to see the absorption of the supply before some kind of meaningful reversal. Then the next most meaningful phase, and this is the phase that we are going to start being active in our trading tactics. With our trading tactics, it's going to be phase C. Phase C is going to be the last test before the uptrend is established. And this testing action is going to be the test of the lows in phase B and lows in phase A. And we basically want to see either absorption of the supply or capitulation by the supply, and where demand is starting to take control. And even in some instances, a low demand can start pushing the prices up just as a function of a very low supply. Phase B in between is going to be the largest phase between these three, A, B, and C. And during this phase, we're going to have a lot of supply and demand action where supply gradually is going to be absorbed, and in phase B, which is going to look at that absorption. Phase D is going to be our first Markov phase in the trading range, where the price starts to move in a different way. And this is going to be a change of character, a second change of character in the trading range. And we basically want to identify that this rally, a sign of strength rally, is going to be different from any types of rallies that we had prior in the trading range. And there are specific characteristics to this rally that we're going to be looking at for the spread, for the volume analysis, and then we're going to look at the backing up action, a different type of reaction that we had that we have in this trading range. And once this happens, somewhere here is going to be a very, very high probability point of entry for us. But as Wyckoffans, we also want to identify other points of entry for us earlier in the trading range. So one of them is going to be on the way up on the sign of strength rally. And then another one is going to be in phase C on the local test of, let's say, a spring or last point of support. So, and this is very quickly, a quick look at the labeling and phase analysis in Wyckoff method of a consolidation of a trading range. There is definitely much more material to this, and I'm putting here the slide so when you watch the video you can stop and you can just read this through, and you can even capture the screen, print it out. There are specific Wyckoff events that are going to happen during the consolidation, and we want to be aware of those because they give us the clues as to where we are in the structure. Are we ready to start moving in a trend? Are we ready to leave the trend? So all of those events are going to be crucial for us to recognize and to know. So now, coming back to our first chart here, Southwest, Brian, what do you think the structure is? Whenever I ask my students, to identify specific events, I always ask them a question. What is catching your eye here? What are the extremes? So let's work with that first.
Well, the first thing I would note is the extreme supply volume right in the middle of the chart that defines the support level.
Okay, great. So what could this be then in terms of the labeling? I mean, we are obviously in which phase?
This would be phase A.
Phase A. Mm-hmm.
Since we're coming down from a previous high, the previous trend is a downtrend. It's a short one, but it's a downtrend. So that would be a selling climax.
Okay, well, let's recognize that the long-term trend was up, right? And the intention for the phase A is always about a stopping action. What are we stopping? We're either stopping here in this area right here. We're either stopping a long-term uptrend. So from this perspective, what is this?
That would be a buying climax.
Okay, so climactic action, and we see that climactic action has not necessarily has a big volume signature, and for the buying climaxes, this is what you're gonna get in stocks. If the stocks are not that speculative, you're probably gonna recognize the climactic action more from the price action where the spread is increasing and velocity is increasing rather than the volume. On the downside, climactic action more likely are going to be associated with that big volume signature. Okay, so if this is a buying climax, then this first move to the downside is
an automatic reaction.
It could be an automatic reaction, and we're thinking here, if this is an automatic reaction, we're probably talking about reaccumulation range, where we're going to consolidate and then move to the upside. But we also can label it slightly differently, and I like the initial thought that you probably had in terms of this is a big volume right here, and it looks very much climactic. And I just mentioned that on the downside, the climactic volume is going to be more obvious than on the upside. So we can also relabel this differently. So Brian, how would we do that? Could we put maybe a climactic action here, like a selling climax or a shakeout, and then start?
Right. That was my initial thought, was that it's a sell climax.
Okay, so let's put here, and let me just erase all of this. Let's just do it your way. So climactic action here, and then either a shakeout or climactic action, more of a local. I'm going to put here a local climactic action. So if this is a selling climax, then the first rally.
There's an automatic rally.
Automatic rally, the next test.
Secondary test.
Secondary test, and that's our phase
A.
Phase A. So here is a stop in action to this move to the downside. We were talking about the stop in action for the move to the upside as the climactic action here. Here is the stop in action for this move to the downside, which also acts as what, by the way?
A change of character.
Change of character. Change of character is going to be the largest reaction in the uptrend right here. And we see that by far this is the largest reaction. And then we also see the change in the supply signature. We also see the change in the spread signature right here. So all of those things are going to be characteristics for the change of character. And whenever we say change of character, that means something. What does it mean, Brian?
That the previous trend has changed.
Mm-hmm.
We're going from an uptrend to either a consolidation or a test and then a reversal.
Mm-hmm. Yeah. So at the minimum, after the change of character, we can expect, a consolidation. We can also, as another scenario, we can expect a retest of the previous high and then a failure. This also can happen that way. But the change of character is such a, I would say, simplistic concept, very basic. But this is something that I find that a lot of the traders and a lot of, students that just come to us, they either don't know about this or they don't use it or they use it incorrectly. So I would definitely recommend looking into this. And, in the first class on the market structure, this is what we start with. We talk about how do we go from the trending environment to the non-trending environment. We need to recognize this, because if we are in the position somewhere here and we are riding this trend, we want to understand when the trend is done, and change of character is going to be the first indication of for us, to change that outlook. Okay, so climactic action here, selling climax here, automatic rally, secondary test. This is our phase A. What is the next extreme here?
The next extreme is going to be a retest of the secondary test, which is much further over to the right. So,
Right.
Well, I was thinking of the one for even further over, but yeah, that one is a test too.
So all of these lows that are close to the support are going to be some kind of testing actions. What are we testing? We are testing the supply. So and we see how, let's say on this test right here, supply is doing what? Supply is going down. On this test right here, and look at this reaction, supply is increasing. What does this suggest, Brian, that supply is increasing?
That there's still quite a few people that are considered weak hands that are in the stock.
Yeah, and then relative to the supply in the future, what does it mean? Increase of the supply. Should we have some kind of retest?
We probably will have another retest, and that's what we're seeing to the right with number 3.
Yeah, and we have a very local retest right here, but we also have a retest here, and this is also a retest of that supply. So as the price comes back here, we see how supply actually increases more. So that suggests more downward pressure, especially after the failure here on the high, and then another failure here on the high. This actually would be a very high probability trade to the downside, a swing trade after this failure right here. Okay, so what else is catching your eye? What are the other extremes that you see here?
Definitely the significant increase in the volume to the right of the chart.
Mm-hmm. By the way, what could this be an indication of? Why would volume in general increase here?
Well, to me, it's going to be a lot of the public coming in and participating in the stock, and well, actually, it's going to be institutional moving the stock because of the extreme volume.
Yeah. So public very rarely would create a lot of volume because they just don't have that type of size, financial resources. So whenever you see a large signature like this, think instantly about the institutions, and as the volume increases, there is definitely some kind of interest by the institutions in this stock, whether they are selling this stock very aggressively after this uptrend and they're kind of like getting rid of their initial long-term position, those campaign positions that we've talked about, or they are starting to actually accumulate the stock. And the price can still go down and they can accumulate on the way down because they are looking for the opportunities where weak hands, let's say on the breakdown, are going to become very nervous. What are they going to do? They're just going to start dumping the stock. That creates a lot of supply. And big institutions can't accumulate when supply is low. This is just their kind of like a pitfall, because if supply is very low and they want to accumulate a meaningful position, what is it going to do to the price? Most likely the price is just going to be marked up on their big orders. So for us, what's interesting here is what is the interest by the institutions here as the volume signature increases. Okay, how about the price extreme here? This is an extreme, right? This is the low in this trade range. If we would be thinking that this is reaccumulation, how would we look at this low?
It would be considered a shakeout.
Yeah, some kind of shakeout action where the price goes below the support in a very meaningful way. So we might have had a spring action where the price just goes lower below the support and then almost instantly it comes back and then goes into the sign of strength rally. Here, this is a very meaningful move to the downside. And we see a lot of increase in volume right here. So if we're thinking reaccumulation, and the reason why we're thinking reaccumulation is obviously there is some kind of improvement in the industry group. So the money is flowing to this group. So we want to look at the structure and to understand for all of the stocks where they are. And if we are thinking the reaccumulation, then in the consolidation, this is the last testing action before the price might potentially go up here. So a shakeout will have the characteristics of undercutting the support in a meaningful way, increase of the volume. And we definitely would be looking, if we're going to buy the stock, we're going to be looking for some kind of testing action of this late supply that we have right here. And the testing action, Brian, what are the two things that we would be looking for there for the test?
let's see.
We need to have a cup of coffee, Brian.
Yeah.
Too early in the morning.
Well, I guess one thing we're going to have
what should happen with the supply?
the supply should decrease on the test.
Yes. So if we had an increase of the supply on the down move, so then on the test, we want to see that decrease of the supply. And what should have happen structurally with the price?
We should see a higher low.
Yeah, we want these two things for the testing action. And if the price is to continue going to the upside right here, and let's say it confirms short term that there is some kind of breakout to the upside, and there is a commitment to the upside, this low right here is going to act as a high low on the lower supply. So, and that would be a successful test for us after the shakeout action. And shakeout action would happen in which phase?
It would be phase C in an accumulation.
Yes. So phase C right here, and we had phase A. So therefore, everything in between is going to be phase B. And if we are correct in our analysis, what should happen with the price from this point?
It should go fairly aggressively back up into the trading range and all the way through it to the resistance level up at the highs.
Okay, so we would experience a sign of strength rally if this is indeed a reaccumulation, and then some kind of backing up action. And the reason why I'm not going above the resistance, which is the definitional term for the sign of strength rally, because we might have an upslope action here where the backing up action might actually rest somewhere here. Another question that I have, Brian, for you here. So, and we looked at the supply and demand in terms of the shakeout action and the testing. So there is definitely some kind of a contraction of the supply going into the potential test. What about the leadership? And we would look at the relative strength ratio here. And for those of you who are not familiar, this is basically a relationship of the price between the stock and the market proxy, whatever you're using. I'm using the spiders here. Maybe in the Q&A, I can, for those of you who are interested, I can show you how to create this relative strength ratio. But basically, it shows whether the stock is outperforming or underperforming a market proxy. So whenever we have the ratio going up, like we see here, this is definitely an outperformance. And then whenever we see a consolidation like this, Brian, what would this mean, this consolidation in the relative strength?
It would mean that the market is behaving fairly similarly to what the stock is. So at that point in time, between 01 and 04, I would say that the market is going sideways, just like the stock is.
Okay, great. And kind of like a interesting fact, maybe from a Wyckoff practicum class. So one of the things that I do with my students is, and Brian can attest to that, is whenever we practice, I don't give the name of the stock. I don't give the price for the stock, and I don't give the time, period for the stock. I also do not give any market structure, and the reason why is because our minds are so curious. They even looking at the market structure, some students might recognize the timing of when it is happening. So, and therefore, their minds will be thinking, the same directional bias for the stock. So to avoid that problem, I just put the relative strength line, and we discuss and speculate as to what the market is doing relative to the price of the stock. So what that does is that creates kind of like a very nonlinear thinking for students as to looking at the specific indicator like the relative strength line, and just thinking in terms of what the market is doing relative to what the stock is doing. So Brian is saying that right here, relative to the price action of the stock, we can say that the market in this area probably doing somewhat the same. I mean, short term, you're going to have some kind of a performance here on the rally, so the market might just underperform right here, or here underperformance, on the reaction, so the market might be somewhat, stronger. But in general, this area is going to be very similar to what the market is doing. But what is happening lately, Brian? What is the leadership right now for us for this stock?
It's underperforming the market. I would suggest the market is now going up from '04 through '09 and beyond, and the stock is going sideways most of that time. So therefore, the market must be in somewhat of an uptrend.
Yes. So right here we are consolidating, and the stock is downtrending on the relative strength. So the market should be stronger than this. So in this area for the market, we are probably seeing either a slight upslope or maybe even an uptrend for the market. And then generally, we see that the stock is underperforming. And it's in the downtrend. So relative strength trends are extremely important because they are showing us the leadership for the stock or for the industry group. And from this perspective, as we are in the downtrend right here, Brian, would we be attracted to this stock at this time?
From a long position standpoint, probably not. On the other hand, if you were interested in shorting it, if you were assuming this was a distribution, then you might be interested.
Okay. And again, the initial idea that we're coming from is that there is some kind of change in the industry group. There is some kind of rotation from a bad ranking to a better ranking. So here we would be looking for the stocks that we could potentially purchase for some kind of long-term campaign, and therefore we're looking at such, big structures. But from the perspective of the leadership here, we don't see any leadership in this stock. I mean, structurally, yes, we could be in the potential phase C, and we can place a structural trade. I call those structural trades because they're just based on the position in the structure of where we are. And we want to buy in phase C, so any indication of the commitment, short-term commitment to the upside could be a buy for us. But in terms of the leadership, this is not the material that we want to look at. Okay, so we spent a lot of time on this slide, so let's go a little bit faster with other stocks. Let's look at the American. Brian, what is the current trend here?
It's also in a consolidation.
Consolidation, and then we were clearly in the downtrend. So the big difference between, let's say, this stock and the Southwest that we looked at is that as Southwest was consolidating, and then lately it had a move to the downside, American actually has been in the very much established downtrend, and then it went into a consolidation. Is it a meaningful consolidation for us for a very, very, let's say, long-term campaign?
I would say no, just by the duration.
Yeah.
The trend down was longer by maybe about double the magnitude of the current sideways trend.
Okay. So one of the laws in Wyckoff method is all about causality. We want to measure the causality, and then we want to project what is going to be the effect of that cause. So the bigger the cause, the bigger the effect. And the kind of like the thinking behind this is that institutions take time to accumulate their positions. They can't really accumulate position like we individual traders do. They have their own traders that they give them the orders to accumulate the stock within the specific price range. And it might take weeks and months, and sometimes even, they're willing to stay in the position for years before it starts moving, in their direction. So if we're looking for a big campaign and we're comparing, two stocks here, look at the trading range right here, and it takes 1 year to consolidate, and look at the Southwest. This is a multi-year consolidation. So the moves out of this structure is also going to be very prolonged and are going to be extremely substantial moves. So from this perspective, American is definitely lacking the causality. Also, let's quickly go through the potential labeling here, Brian. So what is this here?
That would be a selling climax. 2 is an automatic rally. 3 would be a secondary test. 4 is an upthrust in phase B. And then on the right side, we might have potential spring phase C, although it looks extended.
Okay. Yeah, it could be a spring right here and potential phase C, and we can experience some kind of move, to the upside into the $10 area right here. Climactic action is associated with increasing volume signature right here. Again, not necessarily the increase of the spread, and this is something that we've talked in the class environment, as to there are so many variations as to how the structure is going to unfold. There are so many variations as to, let's say, if we're looking at the climactic action, how that's going to unfold. And we need to understand different characteristics to recognize that this was a stop in action. Because look at the spread here and look at the spread, let's say, somewhere here in this area. And we could say that the spread here is much more than in this area. So all of those nuances we definitely, would discuss in the class. The automatic rally here is, probably what gives away the climactic action, because it shows the change of character. The spread is very consistent here. The rally is probably the largest rally that we see in this down move. And it also, on the secondary test, it stops the downtrend. There is also a break of the trend right here. So there are quite a few indications in this area that we have stopped the downtrend. And if you are in a short position at this point, you should consider getting out. If you're not in the position, then it's still not the time to go into this position. It's too early. The trading range needs to develop. Now, Brian has mentioned that this is a potential phase C right here. We would probably prefer to see more in phase B. All right, so this becomes a little bit of a question, is this truly phase C? But we see how supply is actually contracting, and we see that the short-term signature might be slightly increasing, which is totally okay for phase C. So one of the things here to do is, if you're a swing trader, you still can initiate some kind of trade right here, because the boundaries of this trade are so wide. Look at the boundaries, $2 and $10. That's a big return right there. So you might just, tactically play a structural trade right here, just based on your assumption that this is C. If it's going to fail near the resistance, you still have a very good trade. You still, hundreds of percent being made here. And if it fails, you just get out as your short-term swing trade. But if it's going to commit to the upside and going to have some kind of backing up action, then you can keep the position and then add more after the backing up action in anticipation of the continuation of the uptrend. So you have some tactical options at that point. But overall, Brian, would you say that, this is the stock that we would be looking for to open the position, and, also concentrate a little bit on the relative strength here?
Well, thinking of it as from taking a long or a buy position, probably not. I mean, from the heat map, this was one of the weaker stocks, so
Mm-hmm.
uh, that's one aspect of it. But then during the downtrend, it was weaker than the market, and now during this consolidation, it's basically behaving the same as the overall market,
Mm-hmm.
based on the relative strength there.
Yeah, very good, very good. So even though we see some kind of rotation in the group, it doesn't mean that all of the stocks are going to be heavily um, under the influence of big institutions, in terms of the money moving into those stocks. I mean, they could be a very thematical buy, but initially the money is going to go to the stocks that are perceived as the potential leadership in the future. So we want to find that leadership, and American at this point is not necessarily showing us that, neither structurally, because phase B is so small. The whole accumulation is just, it did not take a long time, for a meaningful institutional campaign in the future. Phase C here is also could be potentially a phase B. So if this is A, we might be actually thinking that as one of the scenarios, this is a secondary test in phase B, and therefore somewhere in the future, we're still going to experience that final test in phase C, and this is where we might want to be. So from that perspective, this stock is probably only interesting from the structural point of view for the next swing to the upside. And I'm saying this is because, the boundaries are, just so big. Okay, next one, Delta.
Well, the initial trend was down. Now it's consolidating. We had a change of character. Um,
Somewhere here, I would say all of this.
right. So the beginning of it would be a selling climax with an automatic rally immediately following a secondary test,
Mm-hmm.
and that forms phase A.
Mm-hmm.
Then we have a couple of up thrusts during phase B.
Great. Okay, and then what is this?
That would be a potential spring in what could be a potential phase C.
Okay, again, Brian, let's kind of like tentatively put phase C here. And then as we look at phase C, duration of phase C and duration of phase B and A, we
And
always
just by virtue of the fact that it's so short, it's probably not a phase C event. It's probably another secondary test in phase B.
yeah, and I would think the same way. And that's kind of like one of the things that I get from my students and clients is that whenever they encounter this type of analysis, they start thinking that, and I get the remarks from them, is that this is such a logical way of how we think about the development of the price structure. So there are specific guidelines, specific rules that we have to follow, and therefore we can logically deduct that this scenario with phase C, even though it's probable, but probably it's unlikely, because we need to have a more extended phase B, and plus we need to have some kind of testing in phase B. So this test right here is a very quick test, and it's probably a part of this whole upswing right here, rather than a stand alone test. So we might be thinking that this is not phase C and that this is the initial testing in phase B, and we do have to have that test in phase B because it just tests the presence of the supply relative to phase A supply, and it tells us, is supply still there? What kind of quality of supply is there? And what can we expect as a potential retest in the future for the supply? Is it going to contract or is it going to increase? And what is the price going to do in this area right here? So from the structural perspective, Brian, a good stock for us or not?
Probably not.
Yeah, probably not. Probably we're still waiting. If this is B, we're still waiting for C to happen, some kind of test in C. From the relative strength point of view.
Well, it's slightly stronger than the market initially in the consolidation, but it's gotten weaker more recently.
Yeah, we're seeing some kind of strength right here, and we see it with a confirmed increase in volume signature. So that tells us that our initial idea about the money moving into this industry group and some kind of institutional interest and institutional participation is there. We just maybe not in the correct stock that is ready to move, but there is definitely some interest in the industry group as a whole, and even in this particular stock. Okay, but not ready to move. Okay, let's look at another one, JetBlue. What is the trend?
Similar structure, although the trend really is still down.
Okay.
You have a consolidation drawn on to the right there.
Yeah, but I agree, we're still in the downtrend here.
I would argue that that's maybe not a consolidation yet. We can't conclude that that's a consolidation yet because we really haven't seen a change of character. You know, given that the it's still falling within the trend line.
Okay. Well, I would say that probably we're still looking for a meaningful breakout out of the downtrend, and we want to see something like this where, you know, the price leaves that down channel. We also, in terms of the consolidation, I would tend to think that maybe this could act as a change of character for us with the climactic action and automatic rally here, and we are consolidating. Please note that if we continue consolidating this way, we can naturally at some point, you know, break this downtrend.
Yes.
Somewhere here in the future. So that just tells us at this point that, you know, even though there is some kind of consolidation within the downtrend channel, we're still probably not exactly there for this stock either. And then looking at the market, and this is the first time when I put the market on, and I'm using the Qs here, the market proxy. What is the market doing, Brian? I mean, we definitely had some kind of downtrend here as well. Are we in the uptrend for the market?
No, we're in a consolidation, and throughout that whole time frame from the left side of the chart to the right side, the price has barely made any progress from 03 through 09.
Okay.
At the extreme right, we were in a downtrend like you've drawn, and we look to have broken that in what could be considered a trading range.
Okay. If we look into this trading range right here, and hopefully all of you can see this clearly on your screens, you know, it's a, you know, a lot of data points here on one slide. This rally right here in the consolidation, how would we label this rally in Wyckoff terms?
Well, that looks like a phase D rally into a sign of strength with a backing up action.
Okay, so the price after this, if this is correct, where would it go?
It should go up from there.
Yeah, should go up. So we are still relatively close to the trading range right here. This rally right here has been different from any of the rallies that we've experienced in the trading range right here, and it's a potential change of character and a potential sign of strength rally with the backing up action right here. So looking at this stock right here, JetBlue, are we experiencing the same type of, you know, strength on this rally and the same type of structure? And we started here with the climactic action, automatic reaction, rally, I'm sorry.
Not quite, and the reason I say that is because we've had an upthrust in phase B, and then we've had another attempt to upthrust, but it's formed a lower high right there, so it's failed. Whereas the market itself has gone up into a sign of strength in a higher high and looks doing backing up action. In the case of the stock, it looks like it's failing and potentially might go down again.
Okay, so really good observations here. Failure on this attempt to upthrust, where the market is making the high, and the backing up action here for the market is very shallow, showing a structural strength, whereas here the price comes back into the trading range, which shows a weakness. So we're having a lot of points that are much weaker than the market, even this one right here. So a lot of comparative weakness that we observe. Also structurally, if we are in phase A here with the climactic action, automatic rally, secondary test, upthrust action in phase B. Brian, what is this low right here then, if we're still in B?
Probably another secondary test.
Secondary test in B. So we are still not in C, and this is not our preferred structural position to open a trade here. And combined with the weakness in this area on the relative strength, we are not that attracted to this stock right away. Now, there is one caveat that I want everybody to see, and this is very important, so please pay attention right now. Brian, in this area, are we outperforming or underperforming the market?
We are very slightly outperforming the market according to the relative strength.
Okay, and the relative strength here is not very good visual, and the reason why is because there is not enough space. If I would increase it, this probably would be more meaningful and more significant. Let's do the comparative analysis. Take the market action in the same period and compare it to the stock.
Yeah, so definitely comparing the market chart to the stock chart. The stock is definitely stronger during that time period than what the market is.
Okay, and again, why do you think this is?
Well, just visually, it's got a slight uptrend, really.
Yeah.
Versus the market has a definite downtrend.
Yeah. So in terms of the mechanics of the comparative analysis, we definitely see that there is strength on the rally here. The market is trying to go up, but it's not reaching the previous high right here. Whereas here we are making the new high. We are making the new high after that right here. The market is sloping down. We are somewhat flat on this reaction right here. The market is definitely in the downtrend right here. Any other points here and here, slight downtrend, and here we have a slope which is probably much more than this. So in this whole area right here, we have a lot of strength. What do you think the narrative behind that strength? What do you think the institutions are doing in this area when the whole market is going down?
They are moving from one sector from some other sector into this sector.
Yeah. So two things that are happening. The first thing that we have to think in terms of what the institutions are doing in this area is that they are not actively or aggressively selling this stock. And we've seen this pattern also in other stocks that we've looked at. I mean, we have identified this strength here in Delta. Right here, we see a lot of volume. So not only they are not selling, but they are also aggressively buying. There is some kind of perception in their heads that there's going to be some improvement at some point And because the market is going down and this creates a lot of supply opportunity for big institutions, they're going to load up on the stocks and industry groups where they see the future potential leadership. Look at here as well, right here, and we see that, you know, relative strength improvement right here. So the trend actually has been broken at this point right here. Maybe less evident from this picture. But then again, as you're gonna go through the stocks and you're gonna see more improvement in the stocks, you're gonna start noticing those patterns, and especially in the cyclical and secular bear markets, you want to find big structures that last years and years and years, and that have this type of local relative comparative strength outperformance, because not only it tells you that the institutions have been accumulating and have been buying into this position, they are also in the local spot like this, they are showing you some kind of readiness for the stock to go. But for this particular stock, as we've discussed structurally, we're still not there. Phase A, and we're in phase B. So we still have to have some kind of testing in phase C before we actually can initiate the position. We're also still in the downtrend, and there is still some points of supply that needs to be resolved. So supply needs to be observed. So again, this stock is not our candidate. Okay, let's look at this stock. So two more, Brian, and then I'll let you go. This is Hawaiian. And let's quickly go through the structure.
Well, definitely a consolidation, just like the others. A buying climax where you've drawn the top line. Automatic reaction there with a couple of secondary tests. The first one in phase A. The next swing high there. Well, okay, so that swing low there I would call a. Well, let me go with what I originally was going to say.
Yeah.
The next swing high is a secondary test in B.
Okay, and again, you know, and this is something that I probably would not want to go to in terms of the explanation. You know, we talked a lot about this in the class, you know, as to how to label consolidation. So there are quite a few things. I'm just going to go with Brian's labeling here. Okay, so what are we testing? We are testing the previous high. But we're also testing the previous lows here. So all of these are going to be tests. My preference always would be just to have one test on the climactic action here for the reaccumulation, if we're thinking reaccumulation, and then to have all of the rest of the tests at the lows here. Okay, but we are still in what phase here?
Still in phase B.
Okay, phase B. Okay, so what is this and what is this?
Well, the swing high there is a test of the buying climax. It's potentially an upthrust.
Yeah, it is an upthrust, right? The definition of the upthrust is what? Commitment to the upside and almost instant reversal and price going back into the trading range. So looking at the price action, we are definitely upthrusting here. So upthrust action or an upthrust. And again, not going to go today into the definitions of what's the difference between these two, but we're just going to think of this as an upthrust here. Okay, and if this is an upthrust, then what phase is this?
Well, that could make it a phase C if we're in distribution.
Okay, or if we're thinking reaccumulation.
If we're thinking reaccumulation, then it's just an upthrust in phase B.
Okay, so upthrust action in phase B. And again, you know, why we're thinking reaccumulation? Originally, we started our analysis with there is some kind of rotational pattern that we are observing on the level of the industry group. So we want to see if there is any structural structural spots for us, to enter position in this group, and we're looking for the leadership. So therefore, we instantly would be thinking that this could be accumulation, reaccumulation. Okay, so what about this spot right here?
So that looks a lot like a spring action potentially in phase C. And what it would be at that point in time that I would turn around and conclude that the previous upthrust was not in phase C, but in phase B.
Okay, yeah, good point. So as we're observing this action, we're thinking, okay, the price goes down, it tries to go below the support level, and visually, just remember that chart from, what was it, the first chart, Southwest, where we had that very, very aggressive shakeout action that went below the support and then went into the testing action, right? Here we have the same type of aggression, but there is no really continuation below the support level. So, and that's very meaningful. So we're thinking that this could be a potential spring. Spring happens in phase C. Phase C is something that we would consider as our potential point of entry phase. Okay, so if we are in C, then what should happen next with the price?
The price should pretty aggressively rally back through the trading range up to the resistance level.
Okay.
That was established by
and then in the sign of strength rally. Okay, and then do what? And after that?
After that, we should see some kind of a backing up action that doesn't take it into the trading range, or doesn't take it very far into the trading range if it does go into the trading range.
Okay, so backing up action could use the whole resistance cluster right here, and then we need to see some kind of continuation. This could be also a good point of entry. Brian, do we have any points of entry here if we're thinking that this is C? Could we open a position here, let's say on this last bar, and this is a weekly chart?
Yeah, we definitely could enter a position there. Another point that is noteworthy is it aggressively moved up from C and then hesitated there. And
right here?
Right there. And during that hesitation would potentially be a decent place to open a position.
Okay, yes. Well, we kind of like gonna follow the where we are. So let's say that we missed this consolidation, but I totally agree. If we would be looking at this stock and this group, more attentively, we probably would be considering, opening a position in this short-term trading range. There is phase C right here as the, quick spring, and then a sign of strength right here. Now, so we are discussing tactics right now. If we open a position here and let's say the stop loss is somewhere here, what is our target?
Our immediate target is going to be a move up to the resistance level.
Yeah, so we are looking for the resistance cluster as our target. So we might have target 1, target 2. If we are thinking that there is a sign of strength rally possibility, then the price should exceed target 2, and we can go somewhere here. So from the perspective of reward to risk, where we want to see 3-to-1 ratio, so for 1 unit of risk we want to see 3 units of potential profit. If this is our point of entry and this is our stop loss right here, then we definitely, even with target number 1, we have that 3-to-1 relationship between the reward and the risk. So short-term trade is quite justified here. Now, let's talk about a potential long-term trade. Is there anything here, Brian, or anybody? And by the way, guys, I do see your comments and I do see your questions. And just because I'm looking at the time and I want to make sure that we go through all of the material, let's address some of the questions, in a couple of slides, and then we definitely gonna have a Q&A session. And I don't mind staying beyond, our allotted time, 3 hours, maybe for another 30 minutes. So I'll try to address as many questions as possible. Brian, for the long-term position, is there anything here that is maybe of a concern? And that question is for everybody. So just write down what you see here, and let's discuss this. But Brian, let's start with you.
For the long-term position,
maybe even compare the stock action with the market action, and let's talk about the comparative strength right here. If we would compare this area to what the market is doing.
So they're behaving fairly similarly. If you go from point 1 to point 3 in the stock and compare it with the equivalent points in the market, the slope from 1 to 3 looks about the same. So the stock and the market are basically doing the same thing. Those are the swing lows. The swing highs, 2 to 4, same thing, down sloping in both. From 3 to 5, the stock is weaker than the market because the slope of the comparative slope of the market is now slightly up, whereas the stock is definitely down. So that's a weakness compared to the market. And so the same thing from 4 to 6, and from 5 to 7, if you want to call it that. Now, in that case, the stock actually, I'll take back what I said. The stock is probably about equal with the market there.
At what, at 7?
Between 5 and 7.
Between 5 and 7. Okay.
Yeah.
So we see a lot of aggressiveness in this action to the downside. So if we are considering, stocks in the same industry group, and we are looking at, well, this is a very favorable structure. First of all, look at the multi-year formation. So the bigger the course, the bigger the effect. We like that. Look at this rally right here. That at that time was acting as a potential sign of strength. And then we were thinking, is it going to upthrust here, or is it going to really become a sign of strength? So there is a lot of strength associated with this rally. And then we see that the volume also picked up. So what is this volume right here? Those are institutional participation that we are starting to see. So it's very attractive to us, in terms of this picture. Now, if we were thinking that this is a sign of strength, what should come next? We should have some kind of backing up action. Instead of the backing up action, we are starting to have this type of action where spread increases. And when we look at the spread, look at the biggest spread in this whole formation. Where else would we have a big spread? Maybe right here to the downside, maybe a little bit here, a little bit here. But this is the biggest spread. So supply has increased relative to the spreads that we are seeing and the ones that we would be comparing to, which suggests that, Brian, whenever we have the increase of the supply, what should we have? Next. Increase of the supply dictates that we need to wait for what?
There should be some further testing that occurs.
Yes, further testing. So if this is a swing to the downside, and this is a swing to the upside, and it might continue for some time, Where is the test? Where would potential test come to or at?
It should come back down to that level, that support level.
Yes. So the presence of supply, the aggressiveness of the supply, the inability to create a backing up action, weakness around this area right here relative to what the market is doing suggests that there's going to be some kind of test after we have a completion of a rally. There is no reversal here short term in this area, and I should clean this up. So we should wait for the upswing to be over, and then we should look at the reaction that's going to happen here. And we should wait for some kind of testing action which should happen on higher lows with the contraction of the supply. Now, tactically, in terms of, let's say, us opening a position right here, in both scenarios, whether it's going to be a true sign of strength rally, and it's going to come either to target 1, target 2, or maybe target 3, or if it's going to be a continuation of the rally and then a failure, short term, we still might be okay for this short-term position. But for the long-term investor, this area is becoming not that attractive, because if we are waiting for some kind of retest, then we're just basically committing money not at the support level, but somewhere in the middle of the trading range. And this is exactly where you don't want to open a long-term position. You might open a short-term position there, but not necessarily a long-term. And the only time when this long-term position would work, if indeed we're going to have a sign of strength rally. Now, that's under the question just because of this area right here. So let's see what has happened. And for this stock, I put this right away, so that we would not forget. So if we open a position right here, again, our thinking here is that we can have this short-term trade, and we would be just waiting for either a failure or a sign of strength rally. Now, right here at this point, this is the failure, this is the reversal. So this would be the trade. It's not the best trade that we would be hoped for, but it's a good trade. And this is something that I'm always trying to communicate to my students, is that, what is the best trade? The best trade is the one that is being executed correctly by all of the rules that, in your methodology. So therefore, we followed all of the rules. We assumed that there's going to be either sign of strength rally or a failure. We're thinking about the failure because of this, presence of the supply, aggressiveness, weakness, and the way how it failed back into the trading range, which suggested some retest. So some retest should happen further down the line, and we see that indeed we have 3 points of the retests of this low right here. So from that perspective, short-term trade is valid here. It's not the best in terms of the selection, but if you're gonna trade it, then you can, and you should just be very quick on the way out once the failure happens. And then therefore, Brian, really quickly again, let's go through the structure. If this is the whole structure that we're looking at, then we're still gonna label this as phase A, climactic action, automatic reaction, secondary test, tests in B, secondary tests in B. Then what is this?
It's another secondary test in B, really.
Yeah, probably secondary test in B rather than phase C. And then if the price goes up here, then we're probably what? Where is our phase C then?
It's probably going to be that swing low about halfway in between the,
This
right
one?
about there. Right.
Yeah, and this whole formation, this is a principle within the principle. So we have a trading range within a trading range. So we would just have to decipher and label this whole trading range as well. And obviously within the trading range, this would be C, and then we are here going into phase D. And this is where we want to operate, in this space, where the final test has happened relative to the tests, earlier tests in phase B, and then the stop into action in phase A. Brian, also really quickly, what's happening with our leadership here with the relative strength?
The stock is actually performing slightly worse than the market. The market is probably trending slightly up, just by virtue of the fact that the relative strength curve is slightly down.
Yeah.
And the fact that the stock is basically going sideways.
Yeah, we are going slightly up here with the high lows and downtrend in the relative strength. So that suggests that the market is going up. And again, look at the failure here. This is, we broke this trend right here, but this should be fine. So we should be short-term interested in this breakout on the relative strength, but long-term, we are failing to reach the same high. We are failing to commit above this high on the relative strength, and the price confirms. So one of the rules for the relative strength relationship with the price is that both should confirm if you are going to take a signal. And one of the exercises that we do in class with students is, look at the relative strength line and look at the price. If both confirm, is this a good signal out of the consolidation? And then look at the signals where, let's say, relative strength does not confirm and price does not confirm. What should happen next? So something for you to think about as well. All right. So we kind of dealt with this situation right here. This was an interesting stock and an interesting scenario because it showed a lot of strength. It showed a lot of institutional interest, and yet it showed also unreadiness to go right away into a meaningful trend. And yet we could have had a short position here in terms of the time duration, and we would have to get out as soon as possible. It would be a profitable trade, but not a meaningful trade. These are not necessarily the ones that we're looking for, but we can take, a chance here with an idea that maybe this could be a sign of strength rally. But overall, probably would, lean towards not taking that trade. Okay, last stock, Brian, and I'll let you go. We've been at this for quite some time. Okay, so this is our stock, Alaska.
Right. So we, on the left side of the chart, we're in somewhat of a downtrend. And that trend has been stopped, and now we're in a trading range. Point one would be a selling climax. 2, an automatic rally. A 3 would be a secondary test and form the end of phase A. So the point 2 that you just put a cap over looks like an upthrust in B. And there's a couple of points to the right. Well, okay, so those are going to be secondary tests as well in B.
Okay. Yes. Great. So this is all B, and then we go to the area of 4.
Right, and to the left of where you have the number 4, that looks like a spring to me.
Okay.
With a test of the spring being point 4 itself.
Okay, great. Okay, awesome. Awesome. I love this. So here is a different stock. Remember that first stock, Southwest, and we have a very big shakeout action. But it also had a very, very prolonged trading range, consolidation. And here we are looking at the very, very long consolidation. So, and I wanted you guys to look at 4 points here. 1, 2, 3, and 4. And look at the overall market, and this is, spiders, I'm using this as a market proxy. So on the first move to the downside, what is happening with this stock, Brian?
It's moving to the downside as well.
But in what
And
manner? I mean, is it different from how the market is moving?
not really, they're about the same.
But look at
Maybe,
the thrust
maybe
to the
the stock
downside right here, right?
yeah, maybe the stock is a little bit stronger.
Well, and this is how I would look at this. So let's say this is the low right here. I want to see at this point, let's say 1.5, the progression to the downside that we've made. So probably, somewhat the same. Then the
Yes.
next progression at this point, like 1 point, let's put 6 here. So relative to this low right here, where is the market? So this is the
Yes.
market. And where
So
is the stock?
definitely the stock is stronger, relatively speaking, than what the market is.
Yeah, so much, much stronger. We are traveling much more to the downside here with more aggression, in terms of the price movement, the distance that we travel, not in terms of the actual aggression here. We have the big gap here. And then the next one, let's say at point number 3, relative to the previous support level right here.
Yeah,
What
same
is,
thing.
yeah, same thing. So the stock is stronger on the way down. There was a lot of weakness right here initially. So leadership first, then this leadership goes away, and then we see a lot of support on the way down, and that means only one thing. Institutions have stopped selling, and in some instances, they are starting to accumulate uh, those positions already in this particular stock. Now, relative to, let's say, if we're going to look at point number one, and point number 2, which I defined here on the stock. So if we would look at the market in this stock, how would we compare this to?
The stock is stronger, performing stronger than the market just by virtue of the fact that that's
So
an
there
up.
is some kind of long-term strength as well. And
Yeah.
even though the market actually continued its move here, and the stock went down, but at this point, this is a significant high for the stock. The stock is actually long-term comparatively outperforming. And if we're thinking that, well, look at the market, there is a lot of move here, but comparatively, again, we are just slightly outperforming here. And then in terms of the absolute terms, let's say if we're maybe at 3.5 here and we went to maybe 11, this is a really good move, for the campaign here in 2003, 2007, even for the stock. I mean, this is not a desirable stock for us because there were so many other stocks that were a leadership material where we still had the same or even better performance, absolute performance, but comparatively they were more of the momentum stocks. This is not a momentum move right here. So we, despite of the absolute returns, we still don't want to participate in this. Okay, and then point number 3 and point number 4, and we kind of can look at this as a flat and maybe this as slightly lower. So maybe it's somewhat equal or slightly less for the market, but basically this whole picture is telling us that there is some kind of initial unwillingness by institutions to sell, and there is initial interest and participation in the institutions in phase A, where they start establishing the position. And then we see an increase in volume here, Brian. What does it tell us, at this point?
Uh, that institutions are accumulating the stock.
Yeah, there is some interest in institutions where there is a short-term local weakness here going into phase C, and we can have that weakness as we go into phase C after some elements of strength. And then also, yeah, as Brian said, there is an institutional interest here. And more importantly, as we are going into the spring situation, you said that we should have some kind of test, right? And this is the test, and it happens at the high, low, and supply is contracting. And this is what we want to see going into potential phase C. We want to see that local increase of the supply going into phase C, which reflects a point of fear, especially with the market action right here. And then on the testing action, we want to have a lower supply on the higher low, and this is going to be the testing action that we were looking for. And after this, Brian, what should the price do?
We should see it aggressively run up through the trading range into a sign of strength.
Yeah, and we want to see some kind of commitment above, $11 right here, above this resistance cluster. And again, looking at this stock in this area right here, actually this whole area right here, comparatively, what do we see? What do we see?
It's much stronger than the market.
Yeah, and this is the type of strength signature that we want to pick up. So we want to see some elements of strength within the trading range. We want to see the structural position, which is going to be a preferred structural position for us. And in this place locally, we want to start seeing a local outperformance. And it's so evident as the market goes down, the stock is actually on higher volume is traveling up. So there is some movement of money from institutions into this stock in particular and into the industry group that we've identified, as our group. And this is probably one of the stocks or the only stock that would have some kind of interest to us. I mean, let's look at, the candidates again. So we see the aggressiveness here to the downside, suggesting some kind of retest. In Alaska, we already had this retest, right? So we had something like this where we have this test in action. So the test has happened. So Alaska is much better structurally for us than Hawaiian. In JetBlue, we said that we are still really early on in the consolidation. It doesn't have that such of a big causality. We're still here relatively in the downtrend, in the down channel. We're probably going to see some kind of break of a downtrend later on. We're still structurally in phase B, so therefore we don't want this stock. Delta also early on in the structure, phase A, phase B. So again, not a good candidate. American is the same way. We're thinking that this is phase B rather than C. And Southwest, structurally a good place, actually a lot of oversold value here, for institutions, and we see that there is a lot of interest, so they might be buying. This could be a good structural trade for us here, but there is no leadership and not even, any type of local leadership, where in Alaska we've seen a pattern like this with the test on the higher low. This is a different local pattern here, so not a great candidate as well compared to other stocks. So looking at Alaska, we have all of those characteristics where looking at the rotation in the group, we're seeing that this is potentially where the leadership is forming, and we want to participate. We want to take an initial, initial position in the stock, establish initial tranche. And therefore, somewhere here in this area, just based on this structure right here, we should establish a position. Brian, thank you so much. I tortured you for such a long time. I'm so sorry it took so long, but I want to go into the details. There are a lot of nuances that we even have not talked about just because of the time limitation. Again, guys, and Brian, please stay for a second here.
Okay.
One of the things that I want to stress out, this is a free session, and I definitely want to show what we do in our classes and to show and to profile the method, because the method is so vast, and to gain all of the knowledge as to the different layers of analysis, the logic behind the deductions, as we go through the trading range and through our selection and through our trading tactics. There are a lot of things there to consider. And therefore, we can't cover everything in this session, but hopefully this is enough of the visual picture for you and a discussion that you can say that yes, it makes sense. I resonate with this methodology. I resonate with this logic. So therefore, I want to know more. Brian, you've been with us since, I believe, April. You took advanced Wyckoff course, then you took the swing trading workshop in San Francisco, and now we're working together with you in the Wyckoff practicum. Could
Right.
you tell me and the audience here what is the biggest benefit and what is the biggest impact from going from one place before April and where you are right now? What is the impact on how you look at the market right now, at the maybe like structural view, how you look at the supply and demand, how you look at the strength and weakness analysis? What's the difference for you after all these months of studying?
Well, first of all, I'll say that before I didn't really have uh, a good philosophy, and now after studying the Wyckoff methodology through these classes, I now identify trading ranges. I now identify trends, and one of the things previously I identified trends and marked them like we've been doing here, but I didn't associate the trends with the supply and demand analysis or the relative strength analysis. I never recognized changes of character, and I think the change of character is a significant concept,
Mm-hmm.
and I think that that can be by itself traded
Mm-hmm.
and traded successfully.
Yep.
Um, but all of those elements combined together is definitely something that these classes have taught me. Just the recognition of all of these elements has been something that the classes have identified that I wasn't doing before.
Mm-hmm. All right. Great. Great. And Brian, thank you so much. Um,
Thank you.
a lot of great points that you brought in the analysis, and thank you for helping me out. One
Well,
of the things about the progression, let's say analytical progression of traders that come to our classes, is that right after the first months where we discuss the market structure, um, there is a very huge sense of awareness as to um, the students looking at the market differently. And I have a lot of comments from students, and they're like, wow, I now kind of like see the market as it is, not as I anticipate it to be. I see the structures, I see the trends, and I see where we are in the structure, whether we are still developing the structure or whether we are close to the completion of the structure, final testing. And of course, the concept of the directional bias is much more complex and maybe a little bit more difficult to attain rather than trending, non-trending environments and so on and so forth. But as we go through other modules there with supply and demand, um, we are adding more and more layers, as Brian said, to the analytical deductions that we make as to where the stock is, what's the next directional bias, is the stock ready to move, is this the stock that we want for our selection, is this part of the much larger thematical buy-sell program by institutions, and therefore we want to participate in those because those are the stocks that are going to create the momentum opportunities for us in the price action. All right, Brian, thank you again. Okay, quite a few questions. I think that I should address those at the end. I'm so sorry, we can't go into this right now. We're already running out of time. So I probably should go a little bit quicker. And Steve's question of whether to sign up for the classes, Steve on the wyckoffanalytics.com, and I will show you a little bit more at the end. Okay, Howard, why don't you go now? Because I know that you have to go, and if you don't have time, that's fine. Just let me know, and either I can go with Karen. Howard, are you there? Okay.
Sorry, I muted myself.
How are you on time?
I'm good for probably about 30 minutes, Roman.
Okay, so this is a smaller segment, so let's just go with you here, and
Okay.
we can be a little bit fast. So we were looking at Alaska right here, and we were saying that this is a great spot for us. First of all, this is phase C. Secondly, we see a lot of strength in this area right here. As the market goes down, there is a lot of institutional interest, institutional buying. So we want to go into this structure and label this structure and to understand as we're thinking that the directional buys and the leadership is going to be in this persistent in this stock, at least for the short-term future. We want to understand where is our point of entry here. So let's go into the smaller structure. This is daily. So we were looking at the weekly chart. This is daily. And this is this big long-term phase C that we were looking at on the weekly chart.
Okay.
Okay. So let's try and figure out what is the label in here. And let's start with point number 0.
So point 0, I would say, was a shakeout or a selling climax.
Climactic action. Okay.
So then we rally up to 1, which would be the automatic rally.
Okay.
Coming out of that.
So an automatic rally here could be just an area. It doesn't necessarily has to be, either this point or this point. We can say, okay, these are the swings that we have here. So automatic rally could be at both. All right. What's next?
2 would be the secondary test.
And we can say that this is our phase A right here. In some instances, we might think that this is a test as well, but it comes at really high level here. So we're probably thinking that this is the test. Okay. What's next?
So then we have another rally, and it's not dissimilar to what we had at 1, but we have, a swift rally, and then we have an area which you'd probably say was another testing area, but and it's the kind of prolonged upthrust action in phase B.
Okay. In B. Okay. 4 and 6.
So 4 and 6, you could be thinking here at this point in time that you may have an upsloping structure. You're seeing in at point 4, you're seeing an increase in supply. You might be thinking that that's phase C when you're actually at 4.
Great. And also the nature of this move, right?
Yeah, very swift move to the downside, and you've got peak supply in there.
We want to have 2 points of fear, one on the climactic action and then the second one in the potential phase C, because this is where supply is going to be very predominant. And, Howard comment here on the increase of the supply as the potential of phase C is one of the indications of how we can look for phase C. Okay, so if 4 is phase C and we have the increase.
But I'd also be thinking, I'd be thinking it looks like a C, but I have probably not seen a test in B. So even though I've got some testing at some higher levels, I haven't got testing of that, of 1 and 2 in phase B. So I even though I'd be thinking it looks like a C, I'd have a little question mark in my head just because I hadn't seen a significant test of phase B in phase B yet.
Yeah,
I've just really seen upthrust action.
I would be thinking the same way. The only thing that would be kind of like, again, more indicative of phase C is the way, the nature of how this move has happened. More of the supply signature here, the fear factor, the increase of the spread, increase of the velocity, and so on and so forth. So then, could we have the higher test in B? Yes, we can. We also can think that maybe this is A and then this has been already a test in B. But more importantly, with the increase of the supply, what would we anticipate after the increase of the supply?
So we want to see a secondary test.
Yeah, some kind of test in action, because as supply increases here locally, we want that test in action, and it should come as rally first, then the test, then the continuation, and this test should happen on the higher low with the contraction of the supply. Do we have it here? After
yes, we do. Well, we have it probably. You could argue, if you were looking at it on the daily, that you have a secondary test shortly after 4. We have a rally.
Okay.
We go up.
Like this one.
And then that area there, you might think was secondary test. You've got a contraction of supply, and you've got a mini trading range in there.
Okay. And I think that it's definitely a good logical line that we can take here. Now, one of the things here that I want to point everybody's attention here, if we're thinking that this is the test, then we have to think about the magnitude of this test. So then that's the first thing that comes to my mind. And if we're looking at this big trading range, this seems to be like a very small test for this type of action. So that's the first thought. The second thought is, as we're looking for the structure where we have, let's say, a spring and then the test at the higher low, we want to conclude the upswing first, and then we want to see a downswing into the test. So as we look into this swing, and Howard, I mean, obviously you know this, where does the swing end? Where is the reversal of this swing that starts from point number 4?
The reversal of that swing would be about 5 bars to the right of 5.
Yeah, somewhere here in this area, right? Yeah, so there is no reversal in this area. So as we go through this short-term consolidation, we're still staying in the upswing. And therefore, we're still thinking we need to conclude this upswing for us to then experience a downswing, and that would have these characteristics for us. And therefore, this reversal right here dictates that we're going to have a downswing. Here's the downswing, and here's the upswing here. So our test comes at what? Do we have a contraction of the supply?
We do have a contraction of supply, although we still have reasonably heavy supply in there.
And what does those suggest, by the way?
That's suggesting that there's still quite a lot of stock to be offered at those levels.
Yeah, and therefore we need to test them again, right?
Yeah.
Those levels.
Yeah.
So if we're experiencing the first supply right here, we want to test it. We want to test it at the higher low with lower supply. We have a lower supply here, but it's still quite a considerable supply. Plus the price breaks the support down. So we do have to have another point of testing. This is a test, this is a test, and this is a test. And look what happens next. Supply contracts considerably here. And finally, we're starting to have higher lows. So this is the process of absorption of the supply. One of the best works on the absorption of the supply was done by David Wise, and for those of you who are interested, buy his book, Trades About to Happen, if I believe this is the correct name of the book. And David actually presented in San Francisco in August at the Best of Wyckoff conference. So very good material that he has. Also another book that I definitely recommend, and this is a required book for all of our students, is by Hank Pruden, 3 Skills of Top Trading. And there in chapters 3 to 7, he describes the methodology. So there is an overview of the method. So that book is definitely also should be on your shelf. Okay, so if we're thinking that this is C and that this could be an LPS, let's label it as an LPS, in a more horizontal manner, because this is a higher low. We said that the supply has increased. We need a retest. We had this downswing as the test in action. And in this area, we started experiencing the higher lows and the contraction of the supply. This is exactly where we want to be. This is our springboard. The springboard is the place that Wyckoff was describing, where the stock is ready to move. The supply has been absorbed or is being absorbed, and the stock is finally ready to move. Pat, I'll mention those books again, at the end. So where would be our point of entry here? If we're thinking C, test of the C, this is the big C for us, long-term C. We've seen that there is a break in the relative strength signature right here. So there is definitely some improvement right here. So this is what we're looking for. Market is giving us also indication that this could be a sign of strength in the backing up action, and there could be a continuation.
So I think the point of entry would be on the reversal of that small reaction that you have just to the left of 0.7. So we rally up.
Somewhere here, yes, great.
Yes.
Okay, so this is a good entry point. We also can enter on just a breakout right here, right? So we're thinking cup and handle in the conventional technical analysis terms. We also can even go further down and, open position somewhere here. And the thinking here is that if this is a true phase C, we should have a continuation of this move, and it should kind of become somewhat aggressive. So there might be also opportunities for us here to open a position. There might be some kind of smaller stepping stones that we might have, something of like this magnitude reactions, or even this type of magnitude reactions that we might have on the way up, where potentially we might add to the position. So the key here is not just to recognize the rotation, let's say within the industry, to recognize the potential stocks as a leadership stocks, but also create a somewhat of a meaningful position. And Howard, I know that for you, this is what you're working on right now. When you write, you want to be right in a big way, in a meaningful way. Okay, so if this is our point of entry, let's look what has happened afterwards. So we were talking about this bar right here, this bar right here, and we were saying that any type of reactions, we want to consider, maybe adding to the position. And on the way up here, we are going to have some places where we potentially can add to the positions. So Howard, let's say in the stepping stone trading range number 1, where is another opportunity here for us to add to the position?
So in 1, you're going to want to get in. It's a bit of a complicated trading range because it is you have the initial reaction and then we don't revisit those lows again. So you might even be thinking that that's a you might actually be looking at the slightly smaller trading range, slightly to the right. And if that was the case, then I would continue it further to the right.
Okay.
And then,
Well, so let's just start over a little bit here. So as
Mhm.
we're looking at the swing, let's say the swing started here, and we're going into this swing. First of all, this looks a little bit climactic, right?
Mhm.
A lot
Yeah.
of spread, so climactic spread on the volume, and then climactic spread also with high velocity on the upside. So we're thinking
Mhm.
that we might be at the end of the swing, and it comes exactly, to the support level here on the reaction. So what is this then? If this is a climactic action, then what is this reaction? How would,
Well, in terms of
relative to
its
this swing,
location,
what is this reaction?
that is a change of character.
Yes,
Um,
change of character. Change of character would dictate that in the larger upswing, we're going to have consolidation, right? And
mhm.
this is our phase A, change of character. So we are consolidating here. So therefore, as we look at this smaller trading range, our thinking here is what phase are we in, right? So if this is
Mhm.
phase A for us, we're probably in phase B here. So we
Yeah.
don't want to open a position in phase B. We want to see a phase C. Volume
Mhm.
signature for phase C relative to phase A. What are we going to see there?
So we want to see. Um, we either want to see. It depends what kind of phase C we're looking for, but we could see anything
Volume
from
signature. Think about that.
sorry.
Volume signature for phase C. What would we be expecting there relative
So
to
we'd be
phase A?
expecting. So we're expecting to be the highest volume in the trading range, apart from possibly phase A. So in some
Mhm.
situations, you may see a lower volume in phase C, and in some situations, you may even see an increase in supply in phase
Mhm.
C.
Okay. Well, the more standard volume signature for us is going to be supply in phase A creates change of character, suggests a consolidation. This is one of the points of fear in the trading range. And then in potential phase C, we can observe the local increase of the supply, which preferably should be smaller than supply in phase A. So therefore, our identification of the reactional phase C could be just based on the volume signature, which seems like it should be somewhere here.
Mm-hmm.
So therefore, we eliminate, any entries right here. We possibly thinking this is phase C. So probably a reversal out of this reaction.
Mm-hmm.
Yeah. And here we are definitely seeing, that, we were correct. And then we would do the same thing over and over again. We would think about the swing, change of character, consolidation. Now this is going to be a little bit more difficult here. And see, there are so many nuances, and these are the ones that we definitely would discuss, in the classroom. So again, phase A supply, and then we see that the breakout is confirmed, is happening on the increase in demand. So in this case, this entry right here would be more valid. We wouldn't be thinking about anything else but just a valid breakout. And in this case right here, this would act as a change of character. This would act as phase C, and we would just recognize it again from the volume signature and the spread. And if we are not sure, then we would be looking for the commitment on the sign of strength, and then the reversal out of the potential backing up action. So this could be another entry right here. So on all of the stepping stones, even though they give us different look at the stepping stone ranges, we can find either by the volume signature or by the price action some kind of point of entry right before the next swing to the upside, right before the next swing to the upside. And this is what we want to do. If we're swing traders, we want to pick those spots where we are entering not necessarily within a consolidation right here and we just waiting for 2 months for the price to consolidate. We want to enter right before the price goes up, right before it starts traveling up, because this is the most efficient use of your capital. And more on that we would be talking during the swing workshop and obviously during the classes. Okay, Howard, what about this ending reaction here?
So that's the most significant reaction that we've had going back till the kind of very left-hand side of the chart.
Great. Okay, so what does it mean?
You'd expect some form of more significant consolidation after that change of character.
Absolutely. So there is a change of character which is relates to this whole swing to the upside. This is a change of character for this swing. We were talking about this change of character. It's a smaller change of character for this swing, suggested consolidation. This one suggests that there might be consolidation here. If we look at the supply signature, Howard, what can we assume about this consolidation?
Well, for me, the supply signature on that reaction is reasonably modest.
Yeah.
So you're going to be thinking that at this point in time, I wouldn't be thinking that we're looking at a distribution potentially. It's
excellent.
Based upon what I'm currently looking at, you'd be thinking that this is going to be some form of reaccumulation, stepping stone.
And therefore, if this is a reaccumulation, then can we add, as a long-term investor, can we add to our position in a more meaningful consolidation than
Absolutely.
rather, this smaller points here? Even though we can add, long-term investor can add here as well on all of these points. Maybe not this one because this is already overextended, but a more meaningful consolidation comes, we definitely want to open a position there. Okay, and look at the relative strength. I mean, we are in clear uptrend on the relative strength. The stock is outperforming. We picked the correct stock in the correct industry at the correct market timing. So we are enjoying this move, whether we are swing traders and we are trading the swings, monthly swings, weekly swings, or if we're a long-term trader, then we're definitely in the position here. And because the causality is so big, and we are thinking, should we get out? Well, we stayed in the position for 1 year at this point, and we've made what, plus 300% or so. If this is a leader, and if the industry group improves more, there is no reason to get out of this position until the trend has changed. So, and we don't see, as Howard discussed here, we don't see any signs of the distribution on this change of character. So therefore, as we go into the change of character concept here, and I'm actually going to come back, I know that Howard needs to go, so this is the change of character that we've looked at, and we said it's more meaningful than any of the previous reactions. So it suggests a consolidation. There are a lot of tactical decisions here for different types of traders. So swing traders might say, for now, I'm done with this stock, and I'm going to be looking for, re-entering this position when the strength comes back. The logic behind the long-term investment here would be, I'm not going to get rid of this stock because it still shows a lot of leadership, and supply here, low supply here, suggests that this is going to be a reaccumulation rather than distribution, and therefore it actually might present me with an opportunity to add to the position. Okay, so as we go through this stepping stone consolidation, Howard, and let me just quickly label this. So I'm probably looking at this, B, and then C. Sign of strength, backing up action. So we probably would be looking to enter the position where? Somewhere here?
Yeah, that would be ideal.
Okay, and then one of the things here on the stepping stone is, and again, I'm not going to go into a lot of details. If you want to know those, you can just sign up for the class and we go through this in the class. Whenever we have a prior leadership, our entry points are going to be based and could be based more on the structural analysis rather than on the local, return of the strength into this picture. I mean, we see here how we are flattening out here and then how we are in a slight downtrend here on the relative strength, and there is some breakout which coincides with, this point of entry right here. So this would be good. But we also can just base our entry just on the structural analysis, and as we see phase C to develop, some supply coming in, but there is a lot of effort and no result, so which results in a very bullish outlook at this point. And this increase of the supply suggests some kind of testing, which comes here at the higher low and with the lower supply. This, again, becomes a structural point for us, even without a look at the relative strength, to enter the stock that had that prior leadership. Another way to enter the prior leadership is on the first reaction, which is in a lot of cases going to be the deepest reaction. This is not my preferred way, but I know that quite a few Wyckoff fans would use this on the stock that had the prior leadership and also goes into the stepping stone on the change of character. The thinking here is that this will be the lowest point in the consolidation. Now, the problem that I have with this entry is that you're still committing to the time here and you're not using your capital efficiently for the number of months here. And secondly, it might not be, in some cases, the lowest point. So we might have an instance where the price in phase C springs out of the lower position here under the support level, and you might be shaken out of that position. Well, something to think about. It's up to you how you would choose this. And then let's look at.
You might also be.
Yeah.
You're also counting on the fact that it is reaccumulation. It's likely to be, but it might turn into distribution. And by buying at that point,
yeah, that also could be the.
You're exposing yourself to the risk of a distribution pattern.
Yeah, even though supply is low here in phase A, supply might come later on in phase B. So this is a really good point. Now, it's not probably the best point for this particular stock because after this type of leadership, we are expecting at least some kind of momentum push to the upside, after the consolidation, in an attempt to continue with the uptrend. But in a lot of cases, when we already had 2, 3, 4 moves to the upside, and we see that there is no supply in phase A, or there is relatively moderate supply, and then suddenly in phase D, supply increases, then that's the scenario that Howard is talking about. Okay, how about this? This is the next stepping stone, and there was no prior leadership. So in the case when we are going into the stepping stone and no prior leadership, we really, really, really want to see that change of character on the relative strength. So here we have a downtrend breakout. So this is the area that we would be really, really interested in. And Howard, what can we say about this area relative to what the market is doing?
Oh, we're way stronger than the market.
Yeah, so this is strength. Even though we have weakness here, probably weakness here as well, slightly stronger here, and weakness here. So throughout the whole trading range, we're probably much more weaker than the market. And then suddenly when the market has this reaction, what is happening here? Institutions are not selling, and they're already in this position from both the original trading range, and then there is some kind of rotation here that's happening in this trading range. And this local outperformance relative to the market is showing us that there is a change of character as to how the stock behaves. And therefore, this is a good place for us to enter the position. Also, Howard, I'm assuming, and let's just quickly go through this.
Mm-hmm.
Phase A, so what is this here?
That's a sign of weakness in phase B.
Okay, and then this area right here?
That whole area is probably makes up phase C with multiple tests in phase C.
Mm-hmm. And has its own trading range, and we could go into this trading range and also identify A, and probably going to be here C, or you can take this into C as well, and then a sign of strength, minor, and then a larger sign of strength right here. So structurally, we are in the correct place as well. The market is trending up at this point. This is just, reactions within the uptrend. So all of our filters are working. Market is working, current trend is working, change of character is working, change of character happens on the way out as well. Do we have a course for the next swing to the upside? Yes. Structure, phase C, supply and demand, highest supply in phase A, and we are contracting throughout the whole structure. So yes, leadership, yes, breakout, and then leadership comparatively we identified in this point. So all of those filters have worked for us, in this stepping stone. So this is the point where both swing trader will establish the position in this area right here, and look at the rise here. And this is what we're looking for when we're talking about optimal trading. We want to select leaders within the leaders, and we want to understand the optimal position of the stock within the structure before the move starts. Is this a correct position or not? And so on and so forth. Howard, anything else here to add?
No, I don't think so.
Okay.
I'd add to that.
Okay, Steve, can you see my pointer now? I see your comment that you cannot see my pointer. And let's come back to this slide right here really quickly. What is the change of character? Trending environment, change of character, non-trending environment, change of character again, trending environment, change of character, non-trending, change of character, trending environment. So the key here for us is to understand, from the Wyckoff perspective, where does the trend stops and where does consolidation starts? And this is all going to be evident in this area right here. And again, there is no really time for me right now to go into the explanation of, how we would observe the change of character. And we would do this based on the swing analysis, spread analysis, volume analysis, even relative strength analysis. We can do that as well. And then as we go into the consolidation, this is where we're going to apply our phase analysis. So we want to understand where the consolidation starts, where there is the final testing before the new trend, where is the first initial markup, and then the whole trend, and so on and so forth. Okay. All right. Howard, let's talk. This is the last slide for you. So as we are in the position here, and we open the position here on the way up, different places here, we open the position here as well. This is the last stepping stone that we've discussed, so we open the position here. How would we follow this trend? And at this point of time, would we still be in this position as long-term investors?
I think we probably would. Just looking at the significant bars on the way up, the big kind of bars that are committing to the upside.
And again, this is something that we talked about in the class on the trading tactics. How do we get into the position? Where do we put the stop loss? How do we follow? Now, Howard is mentioning here significant bars. This is something that I've developed for my own trading just based on the Wyckoff methodology. I do teach that technique in the classroom, and we just finished it with the current cycle. Again, probably not going to go into the details of that. The more conventional Wyckoffian way on how to follow the trend would be stop losses 2 support levels away. So the biggest question here is, how do you define the support level, and on which magnitude support levels are you going to use for moving the stop losses? Using that methodology, you still probably would be in the trend. If you're thinking like here, here, then probably this smaller ones here, 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 here. So you still would be in this position just based on the Wyckoff methodology. Based on the significant bars, as Howard had mentioned, Howard, I don't see any reversal in this area necessarily.
No,
or
I don't think so. I think
this.
the August shakeout would,
Yes.
you'd have taken out your time stop, but your price stop would be okay.
Yeah, the price stop probably would be here, the time stop would be here. Again, we're kind of going into the nuances of the stop loss placement. And there are different types of stop loss for those of you who are not familiar with the stop losses. You can have a price stop loss, which in Wyckoff terms would be a catastrophic stop loss where you want to open the position for sure. You also can have a time stop loss. So the time stop loss is based on the price action at the end of the bar. And then you also could have a volatility stop losses. Those we don't necessarily use only in the scenarios of maybe somewhat of the climactic action or a climactic action to the downside. We can use those. And again, we kind of like don't have time for all of this. In the easier way on how you can follow the trend, just use the trend lines, and again, it's very highly misinterpreted, misused technique, but, Wyckoff used it, and, it could be used very successfully. A change of character always is going to show you where the trend is done, and then your exit point could be on the way up on the next rally. You are going to waste a little bit of time here waiting for the price to go up. So your exit should be either on the way down on the change of character or on the way up on the secondary test right here. All right, Howard, I think that's it. Yeah, so thank you so much.
Thank you. Can I just make a couple of comments on that?
Yeah, sure, absolutely, go ahead.
So I think for me, I would be, as I was looking at this also, I'd be looking for, climactic action that kind of spiked through the upper trend line as potential for an upcoming change of character. So things like that, if you saw a really big bar kind of going up, breaking above the upper trend line, we become significantly overbought. That would be a big danger sign for me. Particularly if volume was very, very high, because that would then indicate that we had a lot of selling going on in that on that bar. So that would be for me a bit of a warning sign that something may be happening, especially when we're this extended. And I'd also be looking at what the point and figure count might be based upon the trading ranges, the original trading range, but also the trading ranges that we had along the way. And when I see an overbought position that is very close to potentially a point and figure count, then again, that's a warning sign for me to kind of be extra vigilant that, that overbought condition could very well be the kind of ending action of this current move.
Excellent, excellent. Okay, and obviously, as Howard is mentioning some of the signs of the distribution, we would be looking not just for the stop loss exit, but also, as Howard mentioned, climactic action, change of character, any signs of weaknesses, or a major sign of weakness. So all of these distribution elements are going to be on our mind to to find and to observe as the price starts to consolidate in the distribution manner. One other point here on this chart, and Howard, just one more question. as you look through this trading range right here, you guys can see where the volume is actually the highest. This is where institutions are coming in and establishing the meaningful positions. It doesn't mean that they didn't have any positions before. Some of them might have had the positions throughout this whole trading range. I doubt that. They might have had these positions just for this move to the upside, but a more meaningful accumulation has happened in this area in the long-term phase C. And look at how much of the uptrend we have after that. A leadership is always going to be a leadership, and we want to recognize this in this area right here so that we would participate in the trends like this, whether long-term or if we're swing traders, we want to understand that trend and then we want to participate in the swings right here because we want to trade, to swing trade in the leading stocks. Howard, so last question. I asked Brian this. You obviously went through the advanced Wyckoff course. What is the biggest benefit that you got out of that course?
Actually, there's more than one. I think before I came to the course, I didn't have really a method by which I could, use to analyze stocks and analyze the market, and therefore I didn't actually have trust in anything that I did. Mm-hmm. And I think the biggest thing that I got out of the course was the continual kind of practice and review of the method. You build up a trust level, and if you can trust what you're doing, then you're more likely during times of adversity to stick to the method rather than kind of fall back to doing what you think might be the right thing at the time. So for me, I think it was about learning the method that I could then apply going forwards. Mm-hmm. But more than that, it's, I think, as you've often said, Roman, it's not just about learning the method, it's about changing your belief system. Yes. You need to believe in the method. You need to believe that it works, and you need to believe that, you're going to fall back on it when you need to. I think the biggest thing was the continual practice and rehearsal that gives you the confidence to do that.
Great, great. And Howard has spent a lot of time working on this material, and together we worked on some of the indicators. Howard has a technical background, so he has helped to create so many of great things. The heat map that we're using for this presentation and that's being used on our website by students has been created by Howard. So Howard, just a tremendous thank you for everything that you've done. And we definitely have we definitely have that heat map available to the students. Again, this is just an educational product, so we don't necessarily want to open it up to the public. There are a lot of other similar ways to analyze the market that you can find even for free. But Howard, thank you so much. I know you have to go.
Thank you, Roman. Yep, thank you very much. I enjoyed that.
Okay, great, awesome. Thank you, Howard. Okay.
Cheers.
Guys, I think that we're gonna go beyond the 3 hours that I wanted to have, and I just want to finish the presentation. There is one more module to this, so probably another 30 minutes we're gonna stay, and then we're probably gonna have a Q&A. I'm okay staying, and I know that some of you have to go. So for those of you who have to go, no worries. I'm going to post this video on the YouTube, and I'm going to send out an email to all of the participants, and you guys can watch the remaining of the video. But for those of you who wants to stay, you're welcome to stay, and we're going to go into the Q&A after this module. Okay, Kiran, let's go to you. Are you there?
Oh, yeah. Yeah.
Okay, great. So we kind of followed several of the procedures that we would go through, defining our campaign and thinking about what stocks or a stock we would choose out of the industry group. But then as the market progresses with an uptrend, the industry group also increases the chances that other stocks are in the same industry group are going to be picked up. And therefore, there's going to be other opportunities in other stocks in the same industry group that are going to be structurally sound, that are going to be evolving into a leadership material as well. And in some instances, when we have had a leader like Alaska Airlines, especially on this move to the upside, this was plus 150% return on this move, if or no, actually more. The leadership can change in the industry group. And the reason why that happens is because as let's say a leader like Alaska is being overextended at some point, the valuation for other stocks in the same industry groups becomes very attractive to institutions. They see those stocks as the undervalued asset in the leading industry group. And therefore, they want to go in and pick up that undervalued asset and mark it up. And this is what we would see in the campaign, in the thematical campaign. And this is the word that I want to use here to describe that. Institutions are not only buying one stock in the industry group. If they want to develop a campaign, there is some kind of diversification that they're going to have among the industry group leading stocks. And they can enter those stocks in different points of time. And we need to be aware as to where the money is still going in the same campaign. So the money can go to not just one stock, but to different stocks in different points of time. And here I'm showing that by the time of 2012, when the Alaska Airlines had this stepping stone right here, we definitely see that the group as a whole is a very much leading group, and it has a lot of green on the ranking here. And then we have a lot of red here, which suggests some kind of consolidation somewhere in this area right here. And even for Alaska, we see that it's not anymore a short-term leading stock, but we see that from the elements of the leadership right here, it goes down in the ranking. And this is just all of this reactionary action by the price. And therefore, we are just waiting for some kind of short-term improvement in the relative strength ranking, like this, going from 89 to 43, where we can say that the long-term trend is established, and within the long-term trend, we have a short-term reaction which shows some weakness. And we want to utilize this weakness as an opportunity for us to go in and to reestablish the position or to add to the position. And we want to catch it on the relative strength change. So therefore, looking at this whole ranking, Kiran, what are we looking for specifically for, let's say, the stocks? Which stocks would we be attracted to?
I'd say instantly Delta.
Okay. What about Delta here that you are observing?
That it actually went a lot weaker than Alaska and is now a lot stronger than Alaska.
Okay, that's a very interesting observation. Yes, I actually did not notice this in the relationship to each other, but yes, there was more weakness here than in Alaska, and then stronger and at the second spot here. So we definitely want to look at Delta in terms of the structure and in terms of where we are position-wise in this stock. Okay, what else?
The stock below it, I don't know what that is, ALGT.
Let's not look at this stock. Yeah.
Okay.
Yeah.
Mm-hmm. I'm not really seeing much else. Maybe JetBlue.
Okay. Yeah, JetBlue, we have the lowest ranking was 86, and the lowest, that means that the closer to 100, the worse it is. And then we're going to 56, so that's 30 rank points right there up. So we want to look at JetBlue for sure. How about American here?
Yeah, I was just looking at that actually. it seemed to have like a dip and then a increase, a dip and then an increase.
Okay, and by the way, from the ranking here, we can even assume what the stock is doing, right? So right here we have a more meaningful rally. Then we're going into a reaction right here. Then we are having an upswing right here. Then we have another reaction, very short reaction, and then we're going into the upswing again here. So, and this is one of the things that I want my students, to think of, kind of like a non-linear thinking, where from a different indicator you can imagine what the price is doing, and I think that develops your analytical skills better and your visual recognition skills. Okay, so we want to look at JetBlue, we want to look at Delta, and we want to look at the American. We also want to look at our Alaska, but we already kind of like established with Harvard that there was a position opened here as well. Okay, let's have a look. Okay, so this is American Airlines, and this is exactly where we are looking at the ranking right there. Let's go through the structure. So Karen, I'm looking at this as a structure. So give me some kind of labeling here.
Sure. So selling climax, automatic rally, secondary test, points 1, 2, and 3.
Okay. Phase A.
Phase A.
Okay.
5 would be a secondary test in B.
Okay, in B, so we have to have some kind of testing process. This is it right here.
Yep. 6 would be upthrust action in B.
Okay, we're still in B, and the reason why is because we want to go up, and we need that retest, that final retest, before we go into the uptrend. So 7 is going to be what?
7's LPS in phase C.
Great, and LPS because this is going to be a higher low.
And then 8, sorry.
And phase C, okay.
And 8's your major sign of strength, followed by backing up action.
And a backing up action. Are we in the good structural place, for at this point of time right here, as the stock is showing some strength? Yes. So the structure is yes. Do we have enough causality for us, to consider opening a position here?
Yeah.
Yeah. I mean, look at this multi-year trading range. Okay. Market trend, is it still up or consolidating?
We are pretty much doing the same as the market. So the market
long
trend
term,
is
the market is what?
Is up.
Is up, yeah. So we want to be in the secular cyclical uptrend. Okay. So all of this is great. How about supply signature?
It's definitely a decrease in supply as we go through the trading range.
Okay, so supply is checked in, and the leadership. And at this point, we are looking at, we are having slightly, and this is hard to see here, but this is slightly higher lows and slightly higher highs.
So that's a good sign.
Yeah, we are in the uptrend here on the relative strength. So a good candidate?
Definitely.
Yeah. And it comes, please note that Alaska has been traveling up since this point. I mean, there is definitely a lot of travel here as well. And the reason why we were not necessarily, well, we even didn't look at this stock, I think initially. No, actually we did. And we were saying that we are early on in the structure. We are still in phase B. We can participate in the swing, in the upswing within the boundaries of the trading range, and it still would be a good trade. Remember, we were talking about how from $2 to $10 for short-term trader, this is a good trend. But for the long-term investor, if we are anticipating phase C, then coming in and establishing a position here and then waiting until this develops might not be so optimal in terms of, opening a position at this spot. So the more optimal spot would be opening after phase C or in phase D right here in these 2 points, because this is where the trend takes off and there is just movement, and we want movement. We want that optimal spot for us to come in and to establish that position. Okay, Let's look at delta. Probably somewhat the same in terms of the structure.
Yeah, definitely.
Right, phase A. Then what is this?
Phase B. That's a test in phase B.
B, okay. This,
Upthrust action in B.
okay, in B, and then this.
Again, LPS in phase C.
Okay, LPS. Okay, and then the sign of strength here is not really extensive, and it's we probably can say that this is a minor sign of strength right here, but
Yeah.
it's there. And then on the day that we're looking at the relative strength signature, again, one of the things that we can look at, and I don't know if you guys can see this, the market is actually in the reaction. The stock at the same time is doing this. What is stronger, what is weaker locally?
The stock is stronger locally.
Yeah, so the stock is starting to exhibit some strength right here. Whenever we see that short-term strength coming back into the structure that we're looking at, this is the time when we're saying that there's something going on here. There's institutional buying, and there could be a move to the upside. Also, please come back to the idea in your minds, about the industry group that is leading and that has had a leadership stock like Alaska Airlines. At some point, other stocks are going to be undervalued from the institutional point of view, and they're going to come and they're going to start creating the buying waves in the stocks like Delta. And look at the velocity here. It's much better than Alaska Airlines, in the same period of time. And therefore, it is crucial for us to not just be in one leading stock, but also and I don't necessarily like this word at all, to diversify within the leaders. And I say to diversify, the reason to diversify among the leaders here is only one. We want to participate in the momentum moves. We want our money to be used in the most efficient way. And what is that efficient way? Well, that's when we find in the leading group the stock that is undervalued in the market that is an uptrend market and has some kind of reaction, and we're observing some kind of local strengthening. So we want to go into that stock and establish the position if all of this structure, the trend, causality, supply and demand, and leadership are confirming. Okay, great. So two stocks there that are definitely really good for us. And then a JetBlue. And we were talking about with JetBlue how it was kind of like a consolidation within the downtrend, and it was still the beginning of the consolidation, and we were waiting for it to develop more. Well, here it is, all of it. So what about this point right here, Karen?
That's phase C in this case.
Phase C, minus sign of strength right here on the way up. Apex, we are looking at it right here. Even if we don't see this, and there are some slightly higher lows here, and again, locally in this reaction of the market, we're probably going to comparatively observe some kind of strength. And this is what we would be attracted to right here. And again, undervalued stock in the leading industry group, in the correct positioning, in the correct phase, we are attracted to it. If we haven't gotten here, then there are other opportunities right here. And by the way, Howard was actually trading this stock, and campaigning this stock, and I believe he bought it somewhere here at 8, and I think somewhere here in this area there was a sell. So that was a good campaign, and that lasted more than a year. And then again, throughout this campaign, you can swing trade here, 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 just with an understanding of what is happening long term for the whole campaign, how the institutions operate in this whole in the stock and in the whole industry group, and so on and so forth. Okay, Let me see. Okay. All right, Karen, thank you so much. Last question. For you personally, what was the impact from taking the classes? What would you say like the most meaningful impact that you've had since you took the classes?
I'd say that it was understanding the market, so being able to put some context into what's happening. You know, I'd spent a lot of time looking at the market, but I probably hadn't spent enough time looking at the bigger picture and understanding the campaigns that the institutions and the composite operators deal in. And then the other thing was that I'd actually started reading the Wyckoff book, but I would say that by taking the class, I've been able to put it into practice more. You know, it's changed it from just being theory to being a lot more practical, which has meant I've had a good I've had a good experience with it. So my confidence has increased massively when it comes to trading there.
Awesome. Okay, great. Karen, thank you so much for helping me out here.
No worries,
okay. Last couple of remarks here, and then we're going to go into the Q&A. This is the whole presentation. Now, I've already seen, you know, quite a few questions on where can I sign up and so on and so forth. So, again, 2 events that we're going to have in December. Actually, 2 events in December, and then, you know, let's talk about January. So on December 19th, next Saturday, the whole day, we are going to go through the swing trading analysis by Wyckoff. This is definitely a very popular product that we have because, you know, for those of you who swing trade, we're going to look at all of the elements of the selection. How do we select the stocks for your swing trades? How do we actually recognize that those are good selections? How do we actually find the point of entry? How do we follow the trend? And then we'll talk a lot about optimization of your trading, and that is, you know, is this a good stock for your selection out of all of the selections that you've made, and what would be the best? What would be the optimal selection? And because we want, especially for the swing trades, we want to be in the momentum stocks, and we want to be at the correct timing for that momentum stocks. So that's that. And today we do have a promotion. So for those of you who want to sign up, go to our website, Wyckoff Analytics, go to the classes tab, find that workshop, and you know, $100 off today. The core course, Advanced Wyckoff Trading course, is going to start January 4th, and the first session is free, so you are welcome to attend that. But today, and I'm probably going to extend it until tomorrow, you have $100 off the first month of January. Usually the price is $400, and then you can buy it today and tomorrow for $300. So if you know that you want to sign up, you know, sign up today, take this advantage. If you have some questions to me, email me. You can find my email on the website or at other places, meetups, GGU, and so on and so forth. And I think that's it. Let's see what kind of questions we have. And I've got quite a lot of questions, guys, from you. So I think that I would rather see if there are like repeat questions. So start writing those down again, and let me know what you want to talk about. I can definitely stay for another 15-20 minutes. So let's see. Okay, Carl is asking, will the class next week, December 19th, and that is the swing workshop, have a recording to the Dropbox? Yes, Carl, we definitely, all of our sessions we record, and it just depends on you know, whether you're participating in the specific session, you'll have the access to that recording. Okay, there was a question from Kazim. What are the type values of moving averages that you're using? Can you enter once phase C is identified at first reversal, once the price action closes above the green moving average. If you have time, of course. Okay. So you probably have noticed here that I'm using moving averages. This is a 200, this is 50. The question is, after you identify phase C, can you use the moving average signal to enter the position? Because I think that you are definitely on the right track here, because in a lot of back testing, we see that kind of a lot of people are testing the moving averages incorrectly. And my argument to them is always that you don't have to look at the crossovers only. You have to understand where this, let's say, crossovers, whether with moving averages or with the price, happen contextually. And this is why Wyckoff method is so good, because it brings the value of the context of where the signal actually occurs. So if we would say that we're building a system where we're still using moving averages, but we're using the contextual Wyckoff layer, structural layer, to where we actually take the signal. This signal here would be eliminated because this is still phase B. This signal here would be to the downside, so we wouldn't take this. This crossover would be the correct crossover for us after phase C. It's a bullish crossover if we're using the moving averages crossover. And then it's already in phase D. So the contextual layer is correct here. The signal is correct here. Now, the only caveat that I would add to this is that we definitely going to see this type of crossover probably on the move to the upside, where we have the price moving up, and therefore it's going to produce that type of signal. And therefore, our intention is always to open a position after the reaction. We just would have to wait for the reaction. We would have to assess the supply signature here to decide which reactionary low we want to go in. In this case, there is a consistency of the supply, slight increase relative to the previous area. So we would wait for the decrease of the supply on the second reaction, and then some kind of reversal to initiate the position. So it's not as like ABC is so simplistic in terms of, oh, let's just put a contextual layer and wait for the signal, which is a great idea by itself. But you kind of have to understand exactly, tactically where you would go in and establish the position. Because again, you might be thinking, I can establish the position, even here on the crossover, and my stop loss could be maybe somewhere here. Well, it's good that the price is not reacting too deeply into this territory, but it could react more and it can shake you out. And the second thing is that you still have to think about the most efficient use of your capital. And therefore, if you're having a losing position here for 2 months before it becomes profitable, is this really what your intention is and what your plan is about? So we want to definitely include more contextual layers, like the structure and the supply and demand and the market and the relative strength and so on and so forth. But as an idea, yes, absolutely, that's great. Bruce, thank you. I know you left, but I just want to read your comments. Thank you very much, Ramont. Your expertise and your energy and commitment to your students is most impressive. I'm a slave weapon and I enjoy your work. Yeah, absolutely. I love this stuff, and hopefully it shows. I love working with students. I think that my job is trading, but my passion is probably teaching more. And I love going together with my students and into deductions about the market and the stocks, and building the logic around the Wyckoff methodology, which allows us to do so in so many ways and look into all of the details and nuances as to why we would go with the specific selection or with the specific point of entry and how tactically we would trade. So there is a lot to be said and to be talked about, about the method and trading in general. I think Wyckoff method allows us to be very elaborate in our thinking as to why, when, and what. So it definitely attracts a very, very like-minded people to the method, and in classrooms we definitely enjoy that kind of like sense of togetherness because we're using the same methodology. Okay, let's see if we have any other questions, and then we'll stop. So people asking about the link for this session. Yes, definitely. I will post it on the YouTube probably tomorrow, and then by Monday you will have it. Some other questions earlier on. Does change of character also indicate from non-trending to trending as in sign of strength rally? Yes, definitely. So, and let me just find an example of this. Probably this is a good example right here. So we're looking at this swing right here as a sign of strength rally and as a change of character. And then we're having some kind of backing up action right here. Now, if we look at this rally right here relative to previous rallies in the trading range, we definitely see a lot of changes. The swing to the upside is the largest one. The reactions that we have here, especially on the backing up actions, are the smallest reactions, in this whole trading range. So therefore, the behavior of the price is different from what it was in the trading range. That shows us that this change of character is the beginning of the new trend, and it's going to lead to higher pricing. The change of character here also could identify potentially a sign of directional bias. Now, in some of the instances, you might have an upthrust action or an upthrust, which is going to lead to a different type of scenario here where the price goes and retests the support or breaks and goes lower. So then, in class, we're discussing where this type of change of character is going to have a failure. And as you know, as traders and investors, a failed signal is a very, very, very good signal. So this is just a variation on the change of character, and we should be aware of that. Okay. I don't know if you guys can hear on the background. I have a little bit of the noise there. Book recommendations from Mike. So definitely a book by Hank Pruden. This is the one book that I recommend always. This is a required reading for all of my students, whether they, private classes or GGU or any type of presentations that I give. Hank Pruden, the 3 skills of top trading. And then there are some other books that I can recommend. And let me just, if you go on Wyckoff Analytics to our media page, first of all, you have a bunch of videos here that are free, and you can watch those videos. And then you have all of these links here to different trading articles, books. So under the books, this is the book by Hank. Right here, the 3 skills of top trading. Under the optional books, the book by David Weiss, Trades About to Happen, especially the process of absorption. I thought that he just, did an extremely nice job. Jack Hudson's classic book on Wyckoff method is also could be an introduction to the methodology. Reminiscences of a Stock Operator. This is the book that we use at Golden Gate a lot as kind of like a narrative for the whole methodology, because in this somewhat of the semi-fictional story, Lefebvre describes the campaigning by operators like Jesse Livermore, JP Morgan, James Keen, and other operators at that time. I also would like, and I would highly, highly, highly recommend the article "Anatomy of the Trading Range" by Jim Forte. Jim Forte is our local San Francisco Wyckoffian, and I just saw his presentation yesterday on Elliott and Wyckoff Market Outlook for 2016. This is probably one of the best written articles on the structural analysis. There are also other articles. I would recommend Hank's article on the Wyckoff schematics as well. I co-wrote an article on the point and figures, and this scenario is still unfolding. So this is an interesting article from the perspective of the market. Highly recommend Bruce Fraser's blog on stock charts on Wyckoff methodology. So there is a lot of great stuff right here if you want to do kind of like self-paced learning of the methodology. And then this is the presentation that I gave to the Money Show in 2015, which turned to be a very popular presentation on YouTube. And I just put the slides here for this presentation. You can find the video on the YouTube and also on our channel here, and watch the presentation and download the slides. Everything else is kind of like optional. Okay, another question. Do any of the relative strength scanners or heat maps that you mentioned, apart from the ones that for your students, also provide the ability to do historical analysis from Brian? Brian, I would tend to think that yes, they should, but I'm not that familiar with each product. So I know like on stock charts, you can go like, 1 week behind and 2 months of the historical data. I would have to double check whether they can go, back into the past. I know that this is a very valuable feature, especially for me as an educator and as a trader as well, because I do a lot of backtesting, visual backtesting. So I go back, to the specific periods of time, and I want to see what was the relative strength ranking, for a specific stock or specific industry group. It's extremely important, to do that type of work. So for our students, they do have that possibility. One of the ways, if you want to have the access to Wyckoff Analytics heat map, and I'm going to show you something else also, which is extremely neat that Howard has developed for us, and that is the research page. So I asked him, can you put the stock chart so that we would see right away the structure, and right away, like I see the structure here, there is a consolidation, and then I would have the industry group ranking, and then under that, all of the peers in that group. So what is nice about this setup is that right away I understand where the group is and where all of the stocks, and I just can click on the stock and just see right away where the leadership is, what the structure is, and so on and so forth. And we're using the trading view here, which is just incorporated into this whole system. Now, if you want access to this, and I don't know how long we're going to keep this up, I still have to talk to Howard, but if you want to have an access to this, sign up for the Wednesday class, which is the market outlook class. So we discuss the current market outlook, and the students have the access to the heat map on our website, and it's relatively the most inexpensive product that we have. It's only priced at $75 per month, so you have 4 sessions on Wednesdays from 3 to 4:30, and that way you can, gain the access. Okay, any other questions? I probably should go up. There were so many questions at the beginning of the session, and I kind of skipped those. Okay, there was a question. Could you go into how targets are calculated for the moves out of the trading range? Okay, so primarily as Wyckoffans, we would use the point and figure count, for calculations of the price targets. And there is a whole methodology about this, how we would take the horizontal counts. Please note that those are completely different from the vertical counts, and those are completely different from any type of other horizontal counts that you probably read or encountered. So Wyckoff is very specific as to the construction of the point and figures, and a lot of softwares early on in the 90s, when I started, studying this methodology, did not have those Wyckoff point and figure options. Now most of them do. You go to stock charts, you go to TradeStation, there are so many of those that have the correct Wyckoff point and figure construction. And then you have to understand the guidelines as to how you actually, take that count. I do not teach the point and figure count in the advanced Wyckoff course, but we do have a separate series on the point and figure, which I taught together with Bruce Fraser last May. And we have the recordings of those sessions, and by January 1st, we will post them on our website, and you will be able to buy those. There is almost, I think, 8 hours of material there, so you can understand that I literally don't have time right now, or do I want to go into all of the explanations, because there is a lot of stuff there as to how you should correctly do the counts, how you use your phase analysis for point and figures, to define where the stepping stone consolidation will start, and how to define the timing also. There is a timing mechanism built in the point and figure counts that you can use to identify the points of interest in the stepping stone. So there is a lot of material there that you can gain. Okay, I think that these are all early questions. Let me see if there are any additional questions. Okay, can you explain the cause? From Rosa. Okay, definitely. So causality, when we talk about the causality, we want to understand that during the consolidation, which we will call this is the cause, institutions are starting to initiate the position, especially we see it later on here in this example. And therefore, we want to calculate what is the cause. So point and figures are going to come helpful here. We're first going to identify the most conservative count, and we're going to probably project somewhere here, and then we're going to identify a less conservative, more aggressive count, and we're going to look at to where this count is going to take us. So the cause is going to be our consolidation, where institutions are either aggressively accumulating, or somewhere here where we're going to have a distribution, and then this would be the cause for the distribution, and we would measure it the same way and project the downward target. Okay, great question. Are the point and figures from, are these the point and figure from last May, June? Yes, Carl, yes, I was referring to the series that we had in May, and I believe you took that series. quick question on something you mentioned on JetBlue. That is probably had not broken the downtrend yet. On one of the earlier slides, it looked like it had broken the trend channel, suggesting a possible different interpretation to the phases. Can you comment on this a little bit? Yeah. So early on, we were looking at JetBlue, and we were saying that even though there is a change of character and we are going into the consolidation and we start marking up the phases, labeling the phases, we are still somewhat in the downtrend, especially with this overthrow right here. So the supply line still has not been violated. You know, for the most defined break of the trend, we would have to break this area right here. We also can break the trend as we consolidate and as the downtrend lines are all broken. But we still would continue, Brian, with the original labeling. We don't have to change that labeling in any regard if we're going to still consolidate. A trading range is just going to continue its development. So on the later picture for JetBlue right here, we see that we probably had this as a downtrend. So somewhere here in this area, we are breaking the trend. And consolidation still continues. And we're still going to have our phase A, phase B secondary test here, and then phase C. And we're not going to change the labeling, you know, from our original labeling that we've had. Great question. Is there courses for small time frame? And Khalid, do you mean small time frame? You mean like intraday? You know, more shorter time frame? You know, in terms of your trading? And I'm going to assume that yes. Okay, yes. So the structural analysis, the structure that they look, this labeling, if you're going to go to the intraday action, you're going to see the same thing. And in terms of the relative strength, think about why would you buy a specific instrument on the intraday basis. You have some kind of strength where, let's say the money is going into that particular stock. So we definitely can use the same principles as on the intraday action as we would use on the much longer time frame. So from that perspective, there is no difference for us. So let's say that this is a daily structure here for Apple, right? So let's look really quickly into this. We see that there was a structure right here. There is a structure here. There is a new developing structure right here, or we can use this whole structure maybe, you know, as a potential structure here. But if we're going to go to the intraday level, and let's say, let's go to 15 minutes. Okay, we could see that there is a lot of the same stuff that we see here. Change of character, suggesting a consolidation. Sign of weakness, suggesting a supply coming in, some distribution patterns. Failure on this upthrust, which potentially could be a phase C right here. And continuation of the downtrend right here. So I'm labeling this in the same way as I have labeled, you know, any of the slides that we went through today. Then further, we see that there is a downtrend in the relative strength, and then there is a failure here to reach the new high on the relative strength as well. So this failure also dictates that the leadership is not there, and therefore our trading tactics are going to be concentrated in this area into potential phase C with some kind of reversal. Maybe we would want to wait for some kind of retest. So this would be a very optimal point of entry for us, a high probability point of entry where the stock should move right away to the downside after all of this consolidation right here. So from that perspective, Khalid, it's all the same. There is no difference, which time frame you're using, which instrument you're using. There are some specificity as to the instrument and time frame. So, for instance, I mentioned that for the buying climax, for instance, in stocks, you will have less of a volume signature rather than for the climactic action. You also will have the difference there on the climactic action. If you look at the stocks and if you look at the, let's say, commodities, leveraged instruments. So with leveraged instruments, your climactic actions are going to be more pronounced, and the change of character is going to be more pronounced. You might have the same, with stocks that are more speculative, more momentum stocks. And see, there are quite a few nuances there. And if I go into the time frames, so obviously on the intraday, even from this picture, you see a lot of kind of like moves that can produce some kind of doubt in your mind as to what is happening. So the higher time frame is much cleaner in terms of the analysis that you can perform than the intraday, just because there is so many participants and they have so many different intentions. Okay, will the last presentation be included? John, what do you mean by that? The last presentation be included what? Where? Okay, while you are writing this down, another question from Brian. Will the last presentation be included in point and figures? Okay, so this presentation is going to be posted on YouTube. The slides are only going to be distributed to current students. The presentation, the point and figure series is the videos are going to be posted by beginning of January probably, and I'll send out a general email that it's available, so you can purchase that. Okay, John, I'm so sorry. I'm kind of like not understanding what you're asking me. Session was not provided. You mean the information on the classes? So information on the classes, go to our website. The easiest way, just, if you want to read more about each course, there is a lot of description here. So each course has different modules. So for instance, in January, we're discussing the market structure, basic concepts. Then in February, we're going to go into supply and demand. March, we're going to talk about relative and comparative strength. And then we're going to talk about trading tactics in April. And all of those mini modules have 4 sessions. We usually go for 2.5 hours, usually 2.5 hours. I'm really overextending almost each class. There is a lot of material, so it has to go through a lot of stuff. Also, you can go to the calendar and just look at all of the events here. So like, that January 1st session is going to be here, and you can read and you can register for that session. Carla is asking, December 28th class, please repeat, explain. So Ron Brown was here. He is with HDSI, and I was talking to Ron a lot about, how HDSI is having more and more Wyckoff features in their software. Specifically, they have released the new feature, volume price analysis, which is coming out this weekend, I believe. And Ron and I, we agreed that we're going to have a mutual session together on that feature, and he will be talking about the VPA as a feature of the software, and I will be talking about VPA signals in the context of the Wyckoff structure. So I'm really excited about that session, and probably going to be on December 28th. Okay, from John, fourth session on point and figure recording was not made available. Okay, there was, John, there was a fourth session. Yes, there was Q&A, but we intentionally did not release that session because it was done just for editing purposes, and I said to you guys right away that that session is not going to be released, to you, because all of you are going to be talking. I'm going to be mentioning your names and so on and so forth, and we wanted to put this into the into the production, as to selling those videos at some point. You're saying it was the best session. Okay, great. Yeah. Now, Q&As are always kind of like, great sessions for us to have. Okay. Last question, and then we'll stop from Brian, your calculations of relative strength on the stock and index. Okay, so I'm just going to show you my setup on stockcharts.com. So on stockcharts.com, this is what I do. I go to the indicators and I choose the price, and then you take the symbol of the stock and then the semicolon, and then you divide the stock price by the any of the market proxy that you want to use. I'm using S&P 500 here. I'm putting this indicator below the price, and then in the advanced features here, I want to use the moving averages on the relative strength, so I'm putting the 52 and then 13. I have to do this to duplicate this just to have the second moving average. So instead of putting it below, I'm putting it behind the indicator. And you can just mimic this, on the stock charts if you're using this. And then this is the picture that you're going to have. You're going to have the price above and then the relative strength chart below that. So should be very simple. In terms of the calculations for the relative strength ranking, Brian, that's a different story. So Howard already left, but he was the one who actually created this. So, but the whole idea there is that you assign the relative strength ranking for each stock, for each industry group, and then you put the moving average, and we have, I believe, like 28 weeks. And you see how the ranking actually does its rotation. So that's kind of like in a very nutshell what this is. Is the ranking like IBDs? Yeah, in a way it is. So I'm sure that IBD probably has a more complicated list, from what I heard, a more complicated ranking mechanism than we have. Our ranking mechanism is purely based on the technical information. I believe that their ranking also has some kind of even fundamental, but I would have to check on this, so please don't take my word here on this, but I know that it's more complicated. For us, the key is to just have a visualization of the market where we are in terms of the rotation between the sectors and between the industry groups. And we can go here into any of the sectors, let's say healthcare, and identify all of the industry groups in this sector. And we can, on the last Friday, figure out what are the industry groups that are within this sector are the top performance and the bottom performers. And also, of course, we would be looking for the rotational signature, like here, going from 71 to 35. And then once we have an interest in specific industry group, so let's say pharmaceuticals, we can go and do the same with the stocks, find the stocks that are at the top of this industry group and find some kind of rotational picture. So for instance, this picture is very interesting from 87 to 25. I want to have a look at this stock. So I would be looking at this stock right here. And right away, I mean, the key here is for me, for this tool, and this is what I was asking Howard to do, is I want to instantly have an access to the structure of the stock. So even though there is a rotation here, I want to understand what this rotation is, where it happens in the structure. So in this stock, we see that there was a move to the upside, and then there is a big, huge move to the downside with the gap, which acts as a change of character. So at the minimum, we are probably in somewhat of the phase A, or we're just going to continue with the move to the downside. So to me, this stock is unattractive, even though the relative strength signature is interesting at this point. All right. Okay, Brian, great. Okay, guys, I think that we are done with this presentation. Again, I want to stress to you that we are going to have additional, free events. One is going to be on January 4th. The swing trading workshop is going to be on December 19th. Possible session on December 28th, complimentary session on the VPA feature. For those of you who want to sign up for any of our products, today's the day. Go and get that promotional discount and sign up. If you have any questions, email me to wyckoffAssociates@gmail.com. I really enjoyed this session. I really like that I had my students, my current students, and my alumni helping me out. So Brian, Kiran, and Howard, thank you again. I'm grateful that all of you were able to attend this session. I'm thankful for all of the questions. That shows me that you guys have a lot of interest in this methodology, and specifically in our products, in the way how I interpret the market, how I analyze all of this. So I really appreciate this. Thank you very much. I will email you the link to the sessions, and if I don't, then just nudge me or just look at our YouTube channel. Thanks again. Have a wonderful weekend. Happy trading all.